Good morning. Welcome to the Housing Agency's conference for 2022. My name is Michael Carey and I'm the chair of the board of the Housing Agency. It's my pleasure to welcome all of you here today, all of you here in Trinity College and those of you joining us virtually on Zoom. I believe there's about 300 people signed up. For those of you watching from the US, happy Thanksgiving. That was a joke. Today's conference is focused on housing and sustainability in its widest sense. In the past year, we've seen extraordinary challenges as we come out of COVID, as we face into the implications of Putin's war in Ukraine, the energy crisis, the rising interest rates, increasing homelessness. All of the latest challenges have underscored and underpinned the importance of having a robust, agile and sustainable housing sector, as if we needed that to be reinforced. We're delighted today to be joined by a panel of Irish and international speakers who will share their knowledge on how to deliver such a sustainable housing sector. I'd like to welcome those speakers, thank them for being here, and particularly those who have joined us from abroad. Last evening, the Housing Agency marked its 10th anniversary. And I think it's fair to say that we've seen some real progress, substantial progress in the organisation every year over those past 10 years since 2012. The scope of the organisation has expanded as we've continued to be responsive to all of the changing needs in the sector. All of those achievements have been entirely due to the people who engage with us, our parent department, our board, our management, our staff, and all of the key external stakeholders. I'm particularly grateful to have with us today Minister Darragh O'Brien. I'd like to thank him for his ongoing leadership, guidance and support. We're also joined today by Stephen Matthews, Chairperson of the Joint Oireachtas on the Committee for Housing. Thank you for joining us. I'd like to thank the officials in the department for their ongoing support of the agency. The board of the agency continues to evolve. The board members and the advisory panels have made a significant contribution over the past few years. The board continues to grow in numbers and expertise. We've recently had ministerial approval to extend the board, strengthening the board through appointments in areas such as the private sector, homelessness, corporate governance, financial management and risk control. This broadening of the scope of the expertise of the board reflects the widening responsibilities and the increasing complexity of the role of the agency. The evolution of that board over the last 10 years has reflected the changes in our society, gradually achieving gender balance. The original board in 2012 had just one female member, and following the ministerial appointment that's ongoing at the moment, we will have for the first time in the history of the agency gender balance with slight majority of female members, 6 to 5. The staff of the agency, some of whom are here today, have made a massive contribution to the work of the agency over the last 10 years and in recent years. That group has grown substantially. When the organisation started in 2012, we had 28 staff. 5 years ago, we had 60, and today we have 134, with plans for further growth. A huge thanks to the work of the very dedicated public servants who are experts in their field and make a major contribution to the solutions to our housing crisis. And thanks to Bob Jordan, our Chief Executive, for his leadership. We cannot make progress on our housing challenges unless we have genuine collaboration with our stakeholders, including all of the various agencies, the local authorities, the approved housing bodies and the private sector. We need to not just build houses, but we need to build trust and work together in collaboration. And the Housing Agency is well placed to facilitate such collaboration as it faces into its second decade. I would like to now call on Minister Darragh O'Brien to address the conference and to officially open today's event. Thank you.
I'll lower these down a little bit. Michael's a little bit taller than me. Good morning, everybody, and welcome here. It's great to be here. I know we had our last meeting or conference with the Housing Agency just in May, earlier on this year, and a lot's even changed since May, but it's a Real pleasure for me to be here and to be the Housing Minister that actually celebrates the 10-year anniversary of the Housing Agency. As Michael has said, the last decade has seen the housing landscape change radically. I think all of us can agree that, and I don't need to tell any of you, who are either here in the room or online, that the challenges we face in the housing sector are numerous. They're also diverse, each requiring innovative responses. The Housing Agency itself lies at the heart of rising to those challenges and working to implement practical and workable solutions to these problems. And I would say at the outset, because within the housing sector and commentary around housing, and the plans that we have are only as important as their implementation and the people who actually implement them. And whilst at some stage people feel that the issues and challenges we have in housing are not surmountable, they are. And I'm convinced that we already, even in difficult, challenging times, are making a step change in housing delivery, and importantly in housing policy. And I might touch on some of that later on in my remarks. But since its early beginnings in 2012, the agency itself has grown dramatically, and as all of you will know, it was an amalgamation of three separate bodies: the Affordable Homes Partnership, the Centre for Housing Research, and the National Building Agency. And they were brought together with really the express aim of creating a centre of excellence for all things in housing. And a decade later, here in 2022, I think it is still very, very clear to all of us who interact with the agency and have the pleasure of working with the board and the staff that excellence is still an absolute core commitment and something that shines through in the work that the Housing Agency does on a daily basis. But this is due to the skills, the knowledge and the experience of the staff. And I have to say, really expertly led by yourself, Bob, by the CEO, Bob Jordan. And I have to mention your predecessor, John O'Connor, as well. And supported by all the boards in that period of time, all from diverse backgrounds, different experiences, and different levels or different types of knowledge that have been able to bring that into the agency to make the agency so effective. But what brings all that together is the passion and dedication with which they approach everything. And I think that's evident for all to see. And I'd also like to particularly pay tribute to Michael Carey, the chairperson, for your leadership as chair of the board too, Michael. Because the agency itself, for me, is a crucial delivery partner and a crucial part of what we do in housing. We would not be able to deliver new housing policy that we've done, such as in the areas of affordability, on cost rental and others, which I'll go through in a little bit more detail this morning, without the Housing Agency and without your can-do attitude. Because I'm acutely aware that there is not a week that goes by that I'm not asking the agency to do something else, something different or more. And at every single stage when I do that, those requests are always received positively and with a really clear can-do attitude that we'll take this, we'll get up, we'll run with it, and we'll do it, and we'll implement the policies that government want to on behalf of our people. Michael and I discussed the key themes of this conference here today, and as he has said, it's summed up really in one word, and that one word is sustainability. And that's around sustainable finance models, sustainable communities, and critically environmental sustainability. And these are the themes which actually complement the government's Housing for All strategy. As you'll know, Housing for All sets a target of an average of 33,000 new homes per annum. And we intend as a state ourselves to invest €20 billion in housing over these 5 years, which is the largest such investment in the history of the state and the single biggest intervention that any state has made in housing. And it is needed. But that's just the state investment itself. And as you'll know, the Department of Finance estimate that each year to deliver what we need about €12 billion in investment and in development funding, about £4.5 billion coming from the state. But the remainder is required through private investment. And the government cannot deliver our programme alone. We need both private and public working together to deliver this. And the only way that we can deliver housing at the substantial scale that we need is by attracting private capital to the market. Some don't like to hear that, but I know, and we know, that that is true. And some of this private investment will come obviously from our own domestic banks, but the majority is required from international sources. And we will continue to attract inward investment to our housing market, as we've successfully done with investment in other areas of our economy. We do want this investment in the right places, and that's what Housing for All provides for. It emphasises the need for private investment to deliver and to drive the delivery of homes that would otherwise not have been delivered. But we need to maintain a stable economic and political environment to attract such investment. And we don't have to look too far away from our shores here to see the serious risks to financial stability and investment that populist and ill-conceived policy pronouncements can have. And it is crucially important that we continue to drive on with the most comprehensive plan that we have that's fully funded, which is the Housing for All plan. I'd like to move on to just discuss some work towards our environmental sustainability. And every minister, as you'll know, and every sector of society has the responsibility to do their part to combat climate change under the programme for government. And whilst the Climate Action Plan is currently under review for publication later this month, in November 2023, my department is working hard to achieve net zero emissions by 2050, with a very challenging target of a 51% emissions reduction by 2030. Housing for All takes account of our climate action targets through the following policies. Obviously, the implementation of the nearly zero energy building regulations, delivering more energy efficient buildings, and build healthy, sustainable, durable buildings. And in my travels around the country visiting new estates and new developments, I see these NZEB homes right across the country. And I can attest that they are of serious high quality, they're comfortable homes, and they're homes that are built to the highest of standards. The retrofitting programme for local authorities is also an essential measure to target climate change. And our plan is to retrofit around 40%, or that's just short of 37,000 social homes, older social homes by 2030, upgrading them to B2, BER level or higher. And I actually think we need to go further than that. We've an overall government plan to retrofit 500,000 homes between now and 2030. And I do believe that the state, through the retrofit programme, can lead by example as to what we do in our own social homes. But recognising climate action as a national objective, the National Planning Framework, the NPF, includes compact growth and a better balance of development between the regions. We do intend, colleagues, to undertake a review of the NPF targets now that we've received the new census data, to look at where we can build, how we can drive compact growth as well in particular, but to look at the population growth targets in each of our counties and regions right across the country. So that review is underway, and I would expect us to be able to come back by the end of the first quarter next year with findings in that regard, that we can be flexible in our delivery targets around the National Planning Framework. Improving productivity in the sector through innovation leading to long-term construction cost reduction is obviously key to putting our housing system again on that sustainable footing. To ensure supply, we must increase the number of people employed by the construction sector, as well as improving its productivity, which will provide a sustained level of housing output. And I am heartened to see by the fact that the CSO data shows that we've about 167,000 people now working in construction, which is 20,000 more than the pre-pandemic levels and 40,000 more than this time last year. Through Housing for All, we work with industry, enabling a significant increase in public housing delivery, using modern methods of construction. And just this week, I received approval to establish a land acquisition fund, which will be under the aegis of your good selves in the Housing Agency. And because I'm convinced that the activation fund in relation to purchasing new developable land that the state can activate and particularly focusing that on modern methods and rapid build construction is something that is crucially important. And the Housing Agency have the commensurate expertise to work with our local authorities, and it will mean that our local authorities will be less reliant on seeking to scope out those land opportunities, to conduct negotiations, or indeed to finalise deals within the calendar year. So we want this fund activated as soon as possible. Cabinet have given approval. The Housing Agency will lead in that purchase of additional lands for our local authorities and developable lands so that we can ensure that we're actually building above our targets into next year. I do understand that this is another task that I've set the Housing Agency, and I really am grateful for the way in which you've accepted this work. But we will work closely with you on an agreed approval procedure, set out of the criteria, including linking this fund to sites which can be delivered very quickly, and again, focusing on that modern methods of construction that we want. I just want to finish with a word on Housing for All and how we're faring, if I may. It's been a little over a year since Housing for All was published, and at the time of publication, I don't think any of us would have foreseen what would happen in the new year with the illegal and brutal invasion of Ukraine. And this has and continues to pose significant challenges, and I think everyone in this room is aware of that, particularly in the areas of supply chain, which thankfully have somewhat abated, but also in particular around double-digit inflation and material inflation. And not to mention the efforts that the state is rightly making in relation to accommodating nearly 60,000 of our friends from Ukraine who are seeking safe refuge and harbour here in this country. And we will continue to do that. And that, yes, adds to our challenge, but it's the right thing for this country to do. And although we do seem to be operating in an ever-changing environment, it's important to step back and see where real progress is being made. Home completions, permissions, purchases, first-time buyers and mortgage drawdowns are all up to record levels. They're not where we would want them to be, but they're still robust, even when month-to-month data we see change within it. Number of home completions in the first quarter was just first three quarters, just short of 21,000, which was more than all of the completions in 2021. In the 12 months to October, commencement notices for construction of in excess of 26,000 homes were received. And over the last 12 months to June, 44,000 residential planning permissions were granted. Now, that is not to put aside some of the risks in the short term with regard to planning permissions, commencements, and indeed completions. But as a state and as a government, we will see opportunities to step into that space, to activate dormant or paused permissions, to deliver more affordable homes for people who need them, and social homes for people who need them. And we're actively seeking that with the assistance of the Housing Agency and indeed the Land Development Agency, who I might say it's very gratifying for me to see the Land Development Agency delivering their first homes this year, their first cost rental homes this week, and to see one of the largest affordable and social housing schemes in decades start in Shanganagh Castle in South Dublin, St Kevin's in Cork moving. So we are seeing that movement and that momentum through the state delivery partners such as the Land Development Agency, and I think it's really important that we see that continue. The sector is growing, the affordability measures are beginning to take effect, and the review of our planning system, which is absolutely crucially important, which has been the most comprehensive review of planning since the year 2000, and I intend to bring to Cabinet before the recess on or about the 13th of December, the Consolidated Planning Bill, which will deal with many of the grey areas and areas of contention that we have seen, and whilst fully respecting people's right, and I want that to have their say in planning, to have a better plan-led approach to planning, to look at how we can ensure that the blocks that we've seen in our planning system, that we can move through and we've an efficient and effective planning system that's fit for purpose for Ireland in 2023. And that piece of legislation will be radical. It is comprehensive, and working with colleagues such as Deputy Stephen Matthews here and colleagues right across government, I look forward to that piece of legislation coming into the Dáil in the first quarter of next year and having that legislation passed hopefully by the end of the first quarter, because it's urgent and is absolutely required. We know we need to do much more. The increase in homelessness in recent months is of serious concern to me. And I want to let you know that tackling the fundamental issue of homelessness is our number one priority, and making sure that the response to that is a housing-led response with permanent homes for people who do not have them right now. Just on the supply side measures in conclusion, Michael, we are embarking this year on a social housing build programme, the likes that we have not seen in decades. We'll deliver more social homes this year than we have done literally in decades. Our overall target of 10,500 between build, lease and acquisition, I'm confident that we will hit. And we need to build that sustainable output of social homes so we can have safe and secure homes for people who need them. We've established the First Home Scheme, which brought a lot of commentary, a lot of criticism for a couple of years. We stood the course on that. We've seen just in about 10 weeks, nearly 700 people and households receive their eligibility certs, real people who can buy their real homes at an affordable rate through the First Home Equity Scheme. We've expanded the Help to Buy scheme for the next 2 years, €30,000 for first-time buyers. That's helped about 32,000 households. We've introduced a new grant, a vacancy grant, €50,000 for derelict, €30,000 for vacant, to help homeowners who want to buy vacant homes, to help defray that cost, and that will work alongside the SEAI grant also. We'll have the first affordable purchase scheme sold by local authorities in well over a decade. Here in Dublin, for example, with prices starting at 166,000, and that hasn't happened in well over 10 years. We've established, I think importantly, the Fresh Start principle for a group of people who hadn't actually been catered for, and that's to support divorced, separated people, people who've come through personal insolvency, who don't own any property, to be able for them to access the state supports. And the Fresh Start principle permeates all of the policies and new initiatives that we brought forward. We've introduced a renter's tax credit worth €1,000 per renter in 2023. We've made cost rental a reality. Cost rental didn't exist 12 months ago, where rents are a minimum of 25% below market, long-term secure state-backed tenure. We've expanded the Tenant Purchase Scheme. We've passed the first ever Affordable Housing Act. We've revamped and capitalised the Land Development Agency to focus on affordable homes and activating idle state land. We've banned co-living. We've capped rent increases, limited deposits and strengthened tenant protection. We've brought back about 6,000 vacant social homes in the last 2 years, and another 2,300 being brought back this year. And we've expanded the Valuable Housing First programme to 1,300 tenancies for vulnerable homeless persons. And recognising the extraordinary pressures on the sector, particularly this winter, we've introduced the winter eviction ban. That's just a brief whistle-stop tour of government actions taken through Housing for All. We would not be able to do this without the help, assistance, cooperation and dedication of the Housing Agency, its board and indeed its staff. They're a key stakeholder to help lead the delivery of Housing for All and the achievement of our sustainability objectives. And the incredible and invaluable support that we get is crucial to continuing the progress that we're building on. So look, thank you very much for your time this morning, for your attention. It's a great pleasure to be here, and I really appreciate the invitation to address you. Gurmina Magwib Galer.
Good morning, everybody, and thank you very much, Minister O'Brien and our Chairman, Michael Carey, for officially opening the Housing Agency's Conference on Housing and Sustainability. Welcome to you all here in the room and to those joining us remotely. This year's conference focuses on two themes: sustainable finance and sustainable housing, sustainable communities. In the conference, we'll be emphasising that social, economic and environmental sustainability are interconnected, and delivering on each is essential in meeting current and future housing needs. My name is David Silk, and it's my pleasure to chair the first session of the conference, which will focus on sustainable finance. Before we start, just to remind you that this is a hybrid event, So we'll be taking all comments and questions through the Slido app. The code for the Slido is 3698595. There should be a jingle to go with that, but I haven't got one. Or you can use the QR code to access it. So now it's time to introduce the first speaker. So it's Josh Ryan Collins. As outlined in the conference brochure, Josh is Associate Professor in Economics and Finance in University College London, Institute for Innovation and Public Purpose. He's an economist and with a research focus on housing and land and sustainable finance, and he's written extensively on housing finance. 3 of his notable publications are Where Does Money Come From?, Why Can't I Buy a House?, and Rethinking the Economics of Land and Housing, which was included in the Financial Times Top 12 Economic Books of 2017. So this morning, Josh will be talking to us about demand-side drivers of the housing crisis. So please welcome Josh Ryan Collins. Thank you.
Thanks, David, and thanks to the Housing Agency for inviting me. Delighted to be in Ireland again. Have some ancestry here from Tipperary, so always happy to come back despite the normal Irish weather that we've got today. So I'm going to talk to you not about the supply side problem. I'm going to talk about demand side problems. This might be quite a new approach to some of you. Tends to be the case across advanced economies that the main focus is on supply side problems. But it's my view and my research over the last decade really has emphasised much more the demand side. And this is where finance really plays a really important role. So I'm going to just talk through some of the dynamics around the demand side drivers of house prices, and in particular the interaction between land and finance. And I'm actually also going to talk a little bit at the end about the sustainability issue, which also plays into this problem. So, if I can work out how to operate these slides, yeah. So, these 2 charts, the chart on the left-hand side just shows you the evolution of house prices and rents in the Eurozone area from 2005. And what you can see there is that rents have been going up, but at a fairly gradual rate. These are averages, of course. In cities, we've seen much higher increases in rents, in big cities, especially like Dublin. But on average, we can see that rents actually have broadly tracked or been a little bit above incomes, whereas house prices have been much more volatile and have increased at a much faster rate than rents. Now, if the explanation for the housing crisis was we're just not building enough homes, enough places for people to live in, housing as a consumption good, we wouldn't have expected to see that big difference between the developments, the evolution of house prices and the evolution of rents, because we would have expected rents to have risen as well as not enough homes were being brought on to the market. So that's just an initial point I want to make. The second chart there is a much longer time series going back to 1975, but it shows the same thing. It shows house prices rising much faster than rents, particularly in the lead up to the financial crisis, but then more recently, very fast again, culminating in the very large increases in house prices we saw during the COVID-19 pandemic. The long run average, this is indexed, this chart, against the long run average, which is the black dotted line there. What's interesting, of course, is that you can sort of see that you could sort of think of that black dotted line as a sort of equilibrium house price, if you want. What's interesting is that house prices collapsed after the financial crisis, but they didn't go back to their sort of equilibrium rate. They've sort of lifted off again in more recent years. So that's a first puzzle that if your view is it's a supply side problem, you've got to somehow explain this huge difference in house prices and rents. The other main challenge for the supply siders is explaining the volatility that we've seen in house prices. And of course, Ireland is a prime example of that volatility. You had one of the biggest, if not the biggest, house price booms in high-income economies in the world during the global financial crisis. If you're a supply-sider, you would have probably said, probably Ireland's just not building enough homes to keep up with the pace of demand. Of course, you were building 3 times more homes than every other country in Europe, which didn't experience this huge increase in house prices. Very similar dynamics in Spain. That's the other important example. So volatility and these very rapid increases in house prices. So that's the sort of puzzle I sort of want to set you up with. When we think about the demand for housing, there are 2 main forms, really. The first is the demand for housing as a consumption good. It's a place to live, a place to bring up your kids, a place, hopefully, that means you can get to work reasonably sensibly without having a massive commute. It's shelter, essentially. But it has a second function, which is as a financial asset. It's a store of wealth. It's a kind of alternative to a pension. It's a way of passing on your wealth to your children. And this function, I think, has been rather underplayed in many of the discussions around the housing affordability crisis. Now, unfortunately, these 2 forms of demand are rather difficult to disentangle, particularly for primary residences. So when we buy a primary residence to live in, we are essentially fulfilling both of those functions. It is a consumption good, it is a place to live. But we also think about, it's also a financial decision, because we're putting probably most of our savings into it. We're probably taking out the biggest loan from a bank we'll ever take. And of course we think about it as a financial investment. Now, just on the consumption good function, what's interesting about housing is that it has a high income elasticity of demand, to use the economics jargon. But all that means, really, is that as you get more wealthy, you're prepared to spend more of each additional pound of income or euro of income you receive on housing, more than other types of goods. So, once you've got 20 pairs of shoes or trainers, your marginal utility for an extra pair of shoes falls quite rapidly if you're a normal person. With housing, it doesn't work like that. We always want a bigger garden. We always want to live nearer the best school in the area. We always want an extra bedroom. Housing is a positional good as well. We measure our sort of demand for housing is also related to what our friends and our peers, what sort of house they live in. So it doesn't fit this standard economic models where you have something, a little bit more of it, the demand falls. And some research in the UK found that a 10% increase in incomes leads to 20% more spending on domestic space. The demand for housing is also a function of credit availability, and that's been a key area of my research is to look at that credit availability. The cost of that credit, the cost of capital, i.e. interest rates, clearly plays a very important role, and the running costs of the home, in particular taxes on housing, and expectations, as I said, are also really important. What do you think is going to happen in the housing market? Now, expectations, of course, are formed by what's happened in the past, and housing, it turns out, really is a very safe bet if you're an investor. This recent research has shown that the return on housing, capital gains plus rents, has averaged around 7% in high-income economies over the last 150 years. 7%. Now, if you think about 7%, given recent rates of interest, over the last 20 years. That's a pretty good return. So it's not surprising that this demand for housing as a financial asset has been so strong. You can see in that chart that actually 7% is about the same on average as the return on equity, so the stock market. But housing has proven to be much less volatile an asset than stocks and shares. The key point I want to make really is that the demand for housing is really the demand for location. It's actually, we all want to live, in the areas with the best jobs or the best environment or near the good schools. And there is an inherently limited supply of such locations. There was lots of predictions with the COVID pandemic that we'd see a shift away from working in the office, and everybody would be happily working at home and moving out into the countryside. Hasn't really happened, actually. People want to be near other people. They do want to come to work and have those conversations at the water cooler where the real deals get done. So we haven't seen that sort of dynamic. These agglomeration effects aren't going away just because we have digital technologies. So really what we should be focusing on is land. 81% of house price increases since the 1950s can be explained through rises in land values, construction costs, cost of labour. Okay, it's going up in the last year, but in general that follows standard consumer price inflation. So land is the topic we've got to focus on, and of course the owner of land in a city or a place where there's lots of growth and development has the ability to absorb the surplus that is being created through increases in productivity as economic rent. And that is a key focus that we need to think about. Now, when you have this inelastic supply of housing and inherently limited location or land, and then you have finance on the other side, you get these interesting dynamics. These two commodities both have unique properties in economics that have been rather neglected in mainstream theory. So if you think about, as I said, the supply of land, highly inelastic, supply of finance, in particular since the deregulation of the financial sector in the 1980s and 1990s, finance is highly elastic. It's the opposite in a way of land. It's really determined by banks and investors' confidence as well as regulations. Land is fixed, it's immobile, you can't move it around, you can't hide it. Credit is highly mobile. We've seen this increasing mobility of capital flows. Land tends to appreciate in value through time, and finance will depreciate, and in particular when you have higher inflation, unless it's invested in something or lent. It needs collateral. And land, because of these qualities of being fixed, immobile, inherently limited in supply, is the best form of collateral for a financier, for finance. So they're sort of opposites that attract. And of course, as explained, they have these different economic roles. So my explanation really for the incredible increase in house prices that we saw from the late 1990s onwards, really, leading up to the financial crisis, is the deregulation of the financial sector. There is no other one thing that happened that can explain that dynamic across so many high-income economies. We didn't suddenly have this decrease in the supply of housing or a sudden tightening of planning rules or a sudden increase in population across almost every single high-income economy from the late 1990s in the lead up to the financial crisis. It just didn't happen. The one explanatory factor was this deregulation of mortgage credit and and innovation as well in credit, in the sense that we had the emergence of mortgage-backed securities. And so institutional investors were also able to come into the market and buy up loans that have been packaged up by banks. So this chart just shows you real house prices on the right-hand axis, the dotted line, mortgage credits, the blue line, and non-mortgage credit, basically consumer credit and credit for firms, the standard textbook role of the bank, being overtaken in the late 1990s. And this is averaged across, I think, 16 high-income economies. It's based on research by Jorda Schulerich and Taylor. So again, it's averages, but this pattern is very clear. It was this increase in finance meeting this inelastic supply of land and housing. Now, it is not simply a case of just more bank credit flowing into an inherently limited supply of housing. It is a combination of policies that we have, in particular in Anglo-Saxon economies like Ireland, but also US, Australia, Canada, and the UK, highly liberalised financial system that creates this feedback cycle. As house prices rise, people need to borrow more, banks make more money, have more capital, they're prepared to loan more, combined with a very dominant tenure regime influencing towards private home ownership, landed home ownership as the dominant form of tenure. This enables the capture of those land rents that I was talking about as house prices rise, pumped up by more financial credit. And thirdly, a property-oriented macroeconomic regime with very low taxes on property, particularly primary residences. No capital gains is probably the most important one, but relatively few countries have a property tax. You're one of the few that does have an annual property tax, but I know it's at quite a low level, along with public subsidies for market rents, which sort of props up the private rental sector. And of course, we've had very low interest rates as well for a long time, which encourages more leveraging against property and a political alignment, really, between middle and upper middle class households, the financial sector, the real estate sector, and policy makers. All of this has resulted in ironically, of course, in the decline of home ownership in those countries where home ownership is core to the political economy, is core to the political culture. So that's the great irony that this system, which so favours home ownership as a form of tenure, is actually producing falling, quite significantly big falls in home ownership. And what's interesting about this graph, which shows you the Anglo-Saxon countries, including Ireland in the green there, is this sort of convergence towards home ownership in the kind of low to mid 60% over time. So you can see there a very similar sort of dynamic in all those different countries, even though they started from quite different levels of home ownership. Ireland, of course, having a very high level of home ownership, almost up at 80% in the sort of early 1990s. So affordability is falling inevitably. Less people can own homes, and there's a greater concentration of those land rents for homeowners. So in summary, the thesis really is that you have this reinforcing drivers of rising house prices and land rent extraction, increased speculative demand for residential property, increased financial flows, pushes up house prices, increases land value capture. The response by the state has been to actually subsidise the demand for housing by help to buy schemes, various subsidies for first-time buyers in particular, mortgage interest rate, tax relief, and so on, and a weakening non-market housing offer. So in general, obviously we've heard from the Minister how Ireland's reversing the trend, but in general we've had decreasing support for public housing, for affordable housing over the last 30 years, a privatisation of social housing. And this feeds back into this system, of course. At the same time, you've had this very tax-friendly property and wealth investment policies, and as I said, low interest rates, with supported by financial deregulation and innovation. And all of these dynamics feed back into each other to create this rising affordability crisis. So that's what I've called financialization 1.0, but the financialization 2.0 really is post the financial crisis. We actually did see macroprudential policy come in and reduce bank credit flows and help reduce bank credit flows, and banks themselves, I think, were, had a bad time and became a bit more sensible with their mortgage credit lending. But we had this enormous increase in the flows of finance from institutional investors, in particular corporate investors, private equity funds, the creation of REITs, real estate investment trusts, moving into property, particularly the private rental sector, on a scale that we'd never previously known. And part of the reason for that, of course, was the actions taken by central banks in the post-financial crisis period, in particular reducing interest rates to near zero, and this huge quantitative easing program where central banks essentially took out the safest assets in the market, government bonds, on a massive scale, and left investors looking around for another kind of safe asset. And guess what they chose? They chose housing and property, in particular in larger cities. And so again, you've had these reinforcing types of dynamics. The low interest rates mean that investors can leverage very cheaply against real estate that they already own and buy more real estate. So that's the sort of model that companies like Blackstone have used. We've increasingly seen the private rental sector, as I said, going from a sort of alternative, high yield, slightly risky asset pre-financial crisis to becoming a core asset, not that different from corporate, blue chip corporate bonds or even gold has been compared to gold. It's a safe haven for your money. And again, state action has largely supported this process. We've had generous tax breaks for institutional real estate investors. We've had privatization of public housing programs, deregulation of rental markets, and rising housing benefits for the private rental sector, propping up that sector and giving investors some confidence to move forward. And again, a collapse really in the provision of public and social housing, in part due to the austerity policies introduced by governments. I'm running a bit short of time, so I'm not going to spend too much time on the quite complex nature of the financial assets involved in this kind of institutional investment into housing. But this is a very good report if you do want to know more about this, by Daniela Gabor and Sebastian Cole. But essentially, there's bonds, there's public equity, there's private equity, there's various forms of real estate companies that support both private ownership, rental ownership, and social housing. And this is really taken off across big cities in Europe, including Dublin. You can see there the chart on the left-hand side showing this sort of synchronization of house prices away from their hinterlands in many countries, in the capital cities, and this huge growth in institutional buy-to-let in European countries. Ireland, of course, the biggest, you've had increasing house prices, but the biggest shift has been huge increases in rents in the last 10 years. So this chart shows you the increase in housing costs across Eurozone countries, I think it is. And Ireland's got the biggest change in housing costs in those 10 years, 84% above the EU average. And that's mainly driven, I think, by this huge increase in average rents, 63% increase during those 10 years. So, how to explain this? Well, there's people in the room here who are much more of an expert on this than me, but it's clear to me that some of these dynamics that we've seen across Europe have come to Ireland. The recovery plan from the financial crisis heavily relied on attracting in foreign investment, and we've seen corporate landlords moving in en masse, particularly in the Dublin area. And what these firms do, essentially, what the business model is to close the rent gap. So if they come into an area, they look at the current market rents, they assess whether a higher rental yield could be created, and then they conduct policies to close that rent gap. Aggressive rent increases is kind of the obvious one, but buying up large amounts of property in a specific area can help raise the general cost of rent across an area, so sort of mass acquisitions enabling oligopolistic positions in local markets. And evidence of land banking and keeping properties vacant, again, to help maintain market prices. This is a huge problem in the UK as well, actually, probably just as bad as it is, if not worse than it is here. There is no real incentive for a private sector developer to bring down prices by building so many houses that prices actually fall. It just doesn't make any sense from a market perspective. So that's a sort of key challenge, really. Obviously, we've had rent controls here in Ireland brought in since 2016, but some exemptions, particularly for the build-to-rent corporate investors. And we've seen the creation of the housing assistance payment, which again, of course, it seems like a sensible policy, but it has resulted in the propping up of the private rental sector and those returns for corporate landlords. I've run out of time, I've noticed, but I wanted to just leave you finally with some thoughts on the sustainability issue. I wrote a paper with a couple of other scientific experts on the carbon emissions from England's housing stock, and we looked really at the government's current strategy, which is to build 300,000 new homes a year, and a sort of fairly modest retrofitting plan. And what we found actually is that if they carry on with the status quo with this model, the housing sector by itself will completely consume the UK's cumulative carbon budget for 2050 for a 1.5 degrees temperature, leaving no emissions for any other sector at all in the UK economy. So the current trajectory is completely unsustainable in terms of meeting our carbon emissions targets. And 90% of that is from the existing stock, emissions from the existing stock, but there is also some significant emissions, particularly in later years from new build. In particular, concrete is especially difficult to decarbonise, and the infrastructure involved in creating new housing does create significant emissions. And I think this is a constraint that we need to start taking seriously if we're actually interested in stopping climate change, disastrous climate change, from happening. I will just finish there, really. For me, policies to support affordable housing for all within planetary boundaries, we need to focus on financial regulation and reform. I know Julie's going to cover that in more depth. But we also, I think, need to think about whether we do solve this problem just by building more and more houses, particularly private sector market housing. I think we have to move towards a kind of argument that any new build, given these environmental constraints, has to be affordable, has to be net zero in terms of emissions, and we can't really justify continuing expansion of luxury two-bedroom flats in our cities. There just simply isn't the space, and we have to think much more seriously about what we do with the existing stock, both in terms of the quality, energy efficiency of that stock, because that's where the really big carbon emission reductions are, but also more generally the allocation of that existing stock. We need to start thinking about housing as a finite resource. It's not like a commodity that can just be bought on tap, both because of the inelasticity of the availability of land and because of these environmental constraints. So I appreciate that will be a different way of thinking about the problem than many of you are familiar with, but that's my objective as an academic, and I hope that will lead to some interesting debate. Thank you.
Thank you very much, Josh. And your final comments remind me of our exhibition next door, Housing Unlocked, which hopefully some of the you participants here today will be able to have a look at, where we're trying to use vacant properties in an imaginative way. Just to say, there was, for those joining us online, if you were having problems with the understanding the slides or being able to read the slides, we'll be able to circulate those, and hopefully we've managed to improve the resolution as well in the meantime. So please remember to keep your comments and questions coming. The Slido code, just to remind you, is 3698595. And you can vote for your favourite question as well, and that will help to bring it up to the top of the list. So now I'd like to introduce Michelle Norris, a Professor of Social Policy and Director of the Geary Institute in University College Dublin. Michelle's research interests focus on housing policy, urban regeneration, and comparative analysis of housing provision. She's written widely on these subjects, and last year was the recipient of the Irish Research Council Research Impact Award. She's also been a very active member of government advisory bodies and state bodies, including chairing the board of the Housing Finance Agency and being a member of the Housing Commission. Michelle will focus her presentation on tools to tame the financialisation of housing. Michelle, over to you. Thanks.
Thank you, David. I'm really honoured to be here today to mark the anniversary of the Housing Agency's foundation. I think that among the many challenges that face us in housing, implementation of policy is probably the biggest, and the Housing Agency has really made an enormous contribution in that regard. So well done to everybody involved. So as David mentioned, my presentation looks at financialisation of housing and the impact it has on affordability or unaffordability, and particularly on what governments have done to try address these problems. So it complements Josh's presentation, I think, very well. And just to mention, it's a joint presentation with my colleague Julie Lawson, who's in RMIT University in Melbourne, but probably in bed at the moment as a result. The presentation draws on a project which Julie and I conducted for the United Nations Economic Commission for Europe, and also for UN Habitat and Housing Europe, which is the representative body for social and public housing providers in Europe, and it's called Housing 2030. And it looks at how governments can promote access to affordable housing, and it focuses in particular on the 56 countries that are members of the United Nations Economic Commission for Europe. So this stretches all the way from North America over to the Urals. So it's a very wide area, and Gulnara Roll from the UNACE will be presenting after coffee on the wider project, so you'll get to hear a little bit more about it. So the presentation draws on the research we conducted for Housing 2030 with the 56 governments, and I'm going to look at in particular what responses they have put in place to address the problems associated with the financialisation of housing, and how effective they've been or not, as the case may be. So I thought I would just start by talking a little bit first about what financialisation means. It's a very widely used term among academics, increasingly in kind of popular discourse, but it's very rarely defined, and it's often used in different ways. So I thought it would be useful to just clarify it. So as Josh mentioned, the term refers to the increasing scale of capital investment flowing around the world in recent decades, and in particular increasing flows between countries. The process has been enabled by government regulation, or rather deregulation of financial markets. We saw in most countries from the most high-income countries from the 1970s. So the controls on banks, on financial investment, etc., that were in place at that time were lifted in many countries. But actually, what was more significant was the impact of international actors, like the Basel Committee on International Banking Regulation, and the action of the Eurozone government, or the European Union in relation to the governance of the Eurozone in pushing this model of deregulation. Now, this affects many aspects of society and economy, but it has a particularly strong impact on housing, because a lot of this investment has flowed into housing. So academics often call this phenomenon, a wall of money. A wall of money has emerged, which is looking for a home in terms of investment. A lot of it's flowed into housing, and housing is also a key enabler of the financialisation, because often it's securitized on housing assets. So this affects affordability in several ways. We know it has particular impact on high growth cities which are good investments, which we sometimes call hedge cities. It's a particularly negative impact on people without wealth and assets, and new and younger households, low earners, and people in precarious employment. So obviously these are enormously complex issues, and I think just to get one's head around them, it can be useful to think about financialisation as around being about flows of money or circuits of finance, if you will. As I mentioned, the kind of scale of financial circuits, the amount of money in the economy has expanded, and it's flowed increasingly into housing. But there's very fixed housing supply, as Josh mentioned, and definitely fixed land supply. The number of financial circuits has also changed. So traditional non-profit financial circuits like building societies have largely disappeared in English-speaking countries, and we've seen new circuits of finance like investment funds emerging. The focus of financial circuits has also changed. So we've seen a move away from investing in social housing and non-profit type lending into more speculative investment and certainly profit-making investment. And then there's also been changes in the costs of financial circuits. The cost of money for private households, and particularly people with poor credit ratings, is often much, much higher than the cost for big institutional investors. That certainly in recent years have faced very low interest rates, and for many investors the cost of capital is essentially free because they have equity to invest. And it's also cheaper for investors than social housing providers, affordable housing providers. So all of these changes in the way money flows around the economy have driven financialisation, and also driven this unaffordability we've seen developing, and wider inequality. So this has become very contentious, and there's been a very strong response to financialisation in terms of public debate in many countries around the world, and particularly in cities. So it's a focus of campaigning. We've seen the former UN Special Rapporteur on Housing, Leilani Farah, set up a campaigning organisation called the Shift Campaign on this. And we've seen lots of governments discussing it and trying to respond. However, a lot of the responses have been at city level, city governments, and often these phenomena they're trying to manage are big international developments. So some of the responses haven't been that effective on that basis. And there's also relatively limited research from academics on responses. So I want to go on and just look at what we've learned from the Housing 2030 projects in terms of what are the responses governments have tried to address all these issues, how effective have they been, who's best to operationalise these tools. And I'm just going to organise my presentation around these different characteristics of circuits of finance, as I mentioned. So firstly, just to look at the tools that have been brought in to tame the scale of financial circuits. As I mentioned, in the past, this was much more tightly regulated in high-income countries, and there was an extensive suite of measures both to regulate the demand for credit, I've listed them here, and also regulate the supply of credit. So many of those were removed in the 1970s and 1980s, and we have seen in some areas governments move to reintroduce them, particularly since the global financial crisis. So in terms of the supply of credit, we've seen in many countries since the global financial crisis, new regulations introduced to increase banks' capital reserve requirements, so to reduce their capacity for lending then into the economy, through the Basel III rounds of the Basel Committee on Banking Supervision, and also within the Eurozone as part of the establishment of a single supervisory mechanism for Eurozone banks. We've also seen quite a lot of activity to regulate mortgage lending more tightly again, including in Ireland. We've seen regulation of loan-to-value ratios, loan-to-income ratios introduced, and this is also a development we've seen in many other European countries and English-speaking countries outside Europe. But just in terms of the effectiveness of these measures, macroprudential regulation of things like banks' capital reserve requirements are effectively focused on protecting the stability of the banking sector. The evidence is they've been quite successful in that regard, but they've been far less successful in taming financialization and dealing with house price inflation. Measures like mortgage loan-to-value ratios obviously exclude some households from access to house purchase, and where there's lack of rental accommodation or lack of affordable rental accommodation particularly, that can be an issue. And in almost every country, the impact of these measures has been reduced by two factors. Firstly, they've often been very short-term, because there's been a lot of political pushback, particularly about mortgage regulation. And secondly, they've been counterbalanced by countervailing measures. And the big one in most countries is mortgage interest tax relief, which still exists in the vast majority of countries, but not in Ireland. So I want to move on now and look at the tools to tame the focus of financial circuits. And I've mentioned that in the past, governments commonly used credit guidance to focus financial circuits in certain directions. So for instance, in Ireland, the proportion of bank lending for agriculture, for industry, for housing, etc., was regulated by government until the early 1980s. The focus of financial circuits is also relevant to the provision of finance for non-profit housing providers. And in the past, this was much more widely available. And also non-profit providers like building societies, savings and loans institutions in the United States, Caja in Spanish-speaking countries were the main providers of mortgages. So credit guidance was widely removed from the 1980s. And also, non-profit mortgage providers have largely disappeared in English-speaking world, but not everywhere. So Josh has written about the impact of this, and he and other academic commentators on this phenomenon have argued that it's led to a debt shift, a change in the focus of lending from the productive sectors of the economy, in other words, industry and the job-creating sectors of the economy, into housing. So one of the challenges for government is how can we redirect the money back away from speculation in housing and particularly towards more affordable housing. So there has been, sorry, I don't know what's wrong with this slide. There has been a lot of debate on this issue and a lot of discussion, and the UN has led a lot of it. So there's been a super report produced by the UN Environment Agency in recent years called The Housing System We Need, that looks at how we can provide finance for environmental projects, but also for social housing and affordable housing and fulfill public priorities. Also, we've seen efforts within individual countries and internationally to redirect the focus of financial circuits. So we've seen the introduction of higher risk weighting for mortgage lending compared to lending for business under the Basel III rules, and also as part of the European Central Bank's programme of long-term support for banks. In some countries, we've seen the expansion of non-profit mortgage lending again, and the big example is from German-speaking countries where Sparkasse, or savings banks in English, are still big providers of mortgages. They're essentially large credit unions where you save your money and then you can borrow a multiple of this back. We've seen that model extend into many Eastern European countries after the fall of communism, where it's had a very positive impact. But on the other hand, the impact of these interventions has been limited by a couple of factors. The first is the kind of scale of the interventions is very modest. Compared to the credit guidance we had in the past, it's far less radical, the scale of the interventions we've seen now, the regulatory interventions, and there's still overwhelming commercial incentives for banks and also investment funds to lend for housing as opposed to lending into industry. And one of them is it's just much easier to assess the creditworthiness of an applicant for a mortgage than to assess the creditworthiness of a new startup in a biotech company or whatever. So these types of measures have had a limited impact. So then to move on to the tools that have been introduced to tame the number of financial circuits. As I mentioned, in the last number of years, the number of financial circuits supporting non-profit housing provision, non-profit lending have reduced, and circuits that have supported more speculative investment have expanded. So one of the big challenges is how to address this and rebalance the types of financial circuits. A key aspect of this is putting in place sustainable finance for social housing provision. And when we looked around Europe as part of the Housing 2030 report, we concluded that the most sustainable long-term models of social housing provision are essentially forms of revolving funds where local authorities or housing associations borrow debt. It's paid down over the long term with rents reflecting the cost of provision. Tenants still continue to pay those rents after the loans are paid off, and then that generates equity that's reinvested into housing. So that creates a long-term, sustainable, affordable model of provision. So just to illustrate that, I've just given an example of how this works in Denmark, where the equity is pooled into a central fund. But this is also essentially the system that operates in Vienna. So I know Michaela will be discussing that after the coffee break. There's also been a lot of discussion about the potential for ESG investing, environmental, social, governance investing, and the potential for that to bring more money into investing in areas that are social priorities. So a lot of that discussion has focused on environmental investment, but a lot of those tools could be applied to social housing, and there has been a lot of activity around this in the United Kingdom, but also in the Netherlands. And then finally, the other area where governments have tried to react to address the number of financial circuits is in relation to regulating the new methods that have come on stream to extract value for housing, particularly Airbnb and real estate platforms that allow for short-term letting. So quite a number of governments have taken action in that regard. But if we look at the action overall, there's been very limited action to disable more negative financial circuits that have emerged in recent years. And particularly the action on Airbnb has been ineffective almost everywhere. There's still fewer circuits of finance for non-profit lenders for social housing than there was in the past. And there are concerns that ESG investing and the flow of private finance into social housing could undermine social landlords' social mission. And it's kind of a form of greenwashing for the social housing sector, kind of social washing, if you will. So then the final area is tools to tame the cost of financial circuits and to address the fact that housing or finance is often cheaper for big institutions compared to individual households. It's often cheaper for commercial investors compared to social housing social housing providers. So tax policy can play a key role in evening out these imbalances, and we have seen some action in different countries in relation to that. So just to give you some examples, the social housing sector is often subsidised via tax measures. Social housing landlords are tax exempt. They get to pay lower VAT rates, for instance, in France. We've also seen low-income tax credit being used to provide a lot of social housing in the United States. And a lot of countries have introduced taxes on empty homes. France is an example. They've also been included in Vancouver. And some countries have introduced measures to discourage investment and quick flipping of homes. New Zealand is an example. The Netherlands is an example. The other issue with tax incentives is many of them actually add to demand and increase the price of housing, and mortgage interest tax relief is a big example. So that has been withdrawn in some countries. However, just in relation to the impact of these measures, there's been lots of proposals, lots of discussion on tax, lots of proposals on the cost of finance, but there's been very little action. And the policy action we have seen has focused overwhelmingly on the taxation of the individual households. We've seen very little action to address the taxation of investors or to regulate investment finance going into housing. So in some respects, the government action is kind of fighting the last war, addressing the issues associated that led to the global financial crisis rather than addressing the current issues. So that was quite a quick run through the analysis in the paper. Just to say to you, the Housing 2030 report's available from our website, Housing 2030. You can read about all the examples I've talked about in more depth. Julie and I also have a podcast, which is available here, and we've interviewed Josh for the podcast. And the paper I've presented on, we've published in a journal. So if you look it up, it's open access, so anybody can download it and read it. So thank you.
Thank you very much, Michelle, and thank you to Julie Lawson in absentia as we're on academic grounds. So now we're turning to our third presenter, Dermot O'Leary, who's the Chief Economist with Goodbody Stockbrokers. His work involves in-depth research on Irish housing markets, and he's recently been appointed to the chair of the Delivery, Cost Viability and Procurement Working Group of the Housing Commission. Dermot is a regular contributor to economic debate in the domestic and international media. His presentation will focus on financing the ramp-up in private house building. And just a final reminder that the code for the Slido is 3698595. Okay, thank you very much, Dermot.
Morning, everyone. Thank you to the Housing Agency for the invitation, and congratulations on your 10-year anniversary. I feel a little bit like a weather forecaster in front of the size of this screen. I don't want to hear any jokes about economists' predictions and weather forecasters' predictions at this moment. I feel a bit on my own with the two presentations that have gone before me, talking about how evil private finance is. So I'm the private finance guy here today, and I actually think it's, especially in Ireland, but probably in the UK as well, that it's often the argument that, you know, public house building and public financing of housing is good and private is bad. It's actually unhelpful to debate, and that's what I want to kind of argue over the next 15 minutes or so in terms of the role that private finance can actually play, particularly in the delivery of housing. So I get it in terms of this financialization 1.0. We had financialization supersized 1.0 back into 2000s, and it caused many, many problems in terms of the purchase of end units and increasing credit leading to increasing prices, and we've seen the consequences. But there is a role to play, in my view, in relation to delivery of housing, and indeed the Minister, you know, mentioned that earlier on in terms of the role, the complementary role that the two can play. So that's what I want to do over the next few minutes with three different things. You know, one, just looking at the historical and future sources of finance to you know, finance this massive build-up in housing supply that we need, that will probably go beyond that has been written down in Housing for All. The second bit I want to concentrate is on you know, who uses this finance in relation to who's actually going to put who's going to actually build the houses. And I think Ireland has very specific features that are unique to ours, which is making it more difficult to see that ramp up. And then the third role, or the third part of the presentation, is in relation to PRS. Because yes, there has been this, as Josh called it, financialization 2.0 in the world of zero interest rates, but we're moving out of that period now, and that will have significant implications. In fact, it's already having significant implications on the supply. So let's just start off just with a bit of a brief bit of history in terms of how did we build 90,000 homes in the mid 2000s, and why are we struggling to get above the 25 to 30,000 now? One part of it has got to do with the financing structure of the private financing industry, but housing overall. And this is illustrated in this particular chart here, which looks at the change in the credit to property and construction loans. This includes investment loans as well, so you can't strip it out in the data that goes back to the mid-2000s. But it'll give you some sort of idea of the relationship between the change in credit from the banking system, just from the banking system, and the increase in annual housing supply over that time period. So essentially, and we know this, and this is familiar to you all, it was financed by this massive increase in bank credit, which was financed by external sources coming from Europe, leading to a situation where the loan-to-deposit ratio of the banking system got to unsustainable levels over 160%. And then the short-term finance went away, and we saw the consequences of it. So we've gone through this 10-year period of deleveraging, biggest deleveraging period we've ever seen. But also, because of the leveraged nature of the crash, it has caused problems in terms of the capacity of the construction industry. So who remains to actually build these houses, which I'll come on to in a minute. Just to give you some sort of idea, and we don't want to be going back to this. We saw credit to property and construction growing from 16 billion in 2003 up to 106 billion in 2008 over a five-year time period. So the banks are going to be a part of the solution in terms of financing the increase in housing supply, but they will not be even the majority of the solution, because they can't be, because the situation has changed, regulation has changed, lending limits have changed, risk weights, which were mentioned by Michelle, have changed to make it less profitable for the banks to do this. The risk appetite of the banks is less. And even there's regional limits. If you want to talk about the kind of regional aspect of it, there's regional limits to these lending. So we're not going to see the funding coming from the banking sector, or even the majority coming from the banking sector. So what is the scale of the funding that is required? Some work has been done by the Department of Finance in relation to this. This particular chart is taken from some work that has been done by IIP. And it just looks at the financing requirements of getting to 35,000. And as I said, I think that needs to go bigger. But even just using the 35,000, you get to an annual funding requirement of about 12 billion per annum, which the vast majority of it will have to come from external sources. So the point about this is that there's no one source of funding or financing that's going to get us to that number. It's going to take structures such as forward fund, forward purchase, senior financing, public financing, contracts, joint ventures, PRS. So it's not just one size fits all, it's not just one solution, it's a whole range of different financing solutions that must be included here. To go on to the second point, and that's around the structure of the building industry. Stemming from the leveraged nature of the crash that we've seen, and this might be a little bit difficult to see for some of you, particularly online, but essentially the point I'm trying to get across here is comparing the size of the building industry, the house building industry. This is just looking at the top 10 builders in Ireland versus the top 10 builders in the UK, just using as a comparison, relative to the output of the industry, so relative to house completions. And it shows that in the UK, for instance, the top 10 builders account for 44% of total completions. In Ireland, the top 10 account for about 20%, with a significant portion of that coming from the two PLCs, Cairn and Glenveagh. And just to give you another idea of the small scale, and this creates problems in terms of getting finance, it creates problems in terms of economies of scale and cost. We've estimated 174 builders in Ireland completed between 10 and 99 units in 2021. What we've seen over the last number of years as well is that the top 10, excluding the top 2, have basically effectively gone nowhere in terms of increased output. We've seen a change in terms of mix of the top 10, but that 3 to 10 position has kind of remained pretty much in the 200 to 500 units per annum. So we haven't seen kind of expansion. Now, in terms of taking this sample, if you like, of the information that we have, there's two contentions that are made around house building in Ireland and probably in the UK as well. And Josh brought up this issue of land. Land is absolutely an issue, and you need active land use policy. Absolutely do. But is that going to solve the problem completely in terms of the affordability and the viability of housing? So 2 points I want to make here. First point is in relation to land. When we look at land as a percentage of the average selling price of homes, right? So this is based on the information that we have from publicly published accounts from PLCs in Ireland and the UK. We've included Glenveigh and Cairn in that. So you can see that the land cost in the case of Glenveigh, 16%, in the case of Glenveigh, 13%. So even if you saw a halving of land costs, it would have an impact, absolutely. But it's not going to change the picture dramatically in terms of affordability and viability. The second contention in relation to house building is made is that, you know, builders are making a profit, and that's not good. I mean, people have different views on that. I bought a coffee this morning from a shop, and they want to make a profit, and that's the world we live in. But are they making excess profits? And the answer to that would depend on your perspective, I guess. But this is in a relative sense, looking at the Irish profit margins of the two most efficient builders in the country relative to some of the peers in the UK. And at the moment, they're down towards the bottom of that. As I said, you'll have a different, maybe have a different view on that. But the case is that it's not a massively profitable industry, or else there'll be more people, I think, coming into it and taking advantage of that. The third point on my presentation is in relation to build-to-rent, PRS, and what we're seeing there. Familiar to most of you guys, the interest rate environment has changed dramatically this year. So it was the case, since 2014, 2015, zero interest rate policy, central banks, QE, pulling down interest rates, and that had an impact overall in terms of the investment decisions of investors. Search for yield, and a push down yields on residential as well. That has changed this year. So we've seen a repricing of risk around the world, including in residential, and that has impacts in terms of the economics of PRS and the viability of PRS. And this is a concern in the short term for supply, okay? So we have heard, the Minister talk earlier on about the increase in housing completions, the increase in commencements that we've seen since the reopening of the construction sector in April of last year. That is absolutely the case, but the components of that is important. The biggest component of the increase in supply, commencements, completions, has been apartments in Dublin. Pretty much all of that is being funded by the private rented sector, coming from mainly external sources. But with the increase in yields, and there's a lot of numbers here, you don't need to focus on it too much, but you can get the slides later on. Essentially, we're going from a situation where rental yields, net rental yields in PRS are going from the left side of the chart to the right side of the chart, where it ends up, let's see, but possibly 4.25%, 4.5%. The further it goes over to the right-hand side, the bigger the rents that are required for investors to achieve their required return, which in the context of increasing construction costs makes it very, very difficult to make it viable. So the numbers here looks at the capitalized rent based on different rental levels. And for that reason, it is kind of no surprise that you're seeing eye-watering rents on private rental properties at the start, because these investors are obviously trying to get them at the start because there's a rent cap there. I'm not saying this is right or wrong. I'm just saying that investors are looking for a return. Yields have risen, so it makes it decision a lot more difficult in terms of the viability and return that they get on that. So what does that mean? Well, it means that the viability of build to rent is threatened, and I think we're already starting to see the impact of that in terms of new supply coming on stream. In terms of commencements, in the most recent data that we've analysed, at least, it shows that the apartments commencements are falling off, as well as housing side, which that's a different story. But focusing on the build to rent side of things, if that is the case, and I think it is, that means that someone else is going to have to fund it if they're going to be built. And which means that for me, moving from a private finance guy to a social and public finance guy, the government will have to fill up the gap somewhat. What I point out on this is that the government has been already the biggest or seen the biggest increase in its purchasing of private units over the last number of years. There's this debate, private funds are coming in and buying up the stock from under the noses of first-time buyers. There's been a bigger proportion purchased by the public sector generally. That includes, AHBs and the like. But I think that will have to continue. And the point I'd say on this, just to finish up the next two slides, is that you need to see a relationship develop between the private and public sector to actually get this increase, this required ramp up in public house building over the next number of years, and to ensure that some of the units that perhaps would have ended up in the private sector are built in the first place. So that's what I'll kind of finish up on with four kind of conclusions. One, the state will play a larger role because of the problems that we're seeing in relation to PRS and in relation to private house building overall. How do you increase private house building? Well, you remove some of the risks that are there, like planning, like services, some of the demand risk, but not all of it. And that will improve the funding possibilities of the private house builders. The third point, the state should not be in competition for housing output with the private sector. So 2 slides ago, I showed you the change in purchases of end units. In some cases, the public sector is in competition with the public sector, which is not helpful in any way. So the last point I'll leave you with is this. The state shouldn't be in competition with the private sector, but the funding that will come from the public sector over the next number of years, the Minister talked about 4 to 4.5 billion per annum, should be used not in competition, but to complement the private sector. Okay, so you have a situation where some in the private sector are relying on their public sector contracts and they're building maybe 50 units, and that's fine. If you can commit to multi-year funding arrangement or multi-year purchase agreements, that private builder can then be told, look, go off and get funding for another 50 units to sell to the private sector. So that's the way in which we can use the commitment that's there from the public sector in terms of funding to increase output separately, to complement it, and thus get closer to that housing target that we need. I'm going to leave it at that. Thanks very much for listening.
Thank you very much, Dermot, and thanks to our 3 speakers. Just a reminder that the slides will be available. I know there's a lot of detail on the slides, so people may want to go through them in more detail. And also the Slido code is 3698595 for anybody who wants to ask a question or who wants to vote for a question. So we're going to have a very short panel Q&A now, if that's all right, and then we'll have a coffee break. But we're right on time, which is down to good chairing, I think. Am I? I'm going to combine the first 2 questions because I think they're kind of linked together, or certainly they could perhaps be coupled in the interest of time. And the first one was from Claire McManus from the Royal Institute of Architects in Ireland. How can the system prioritise sustainable housing models, compact growth rather than suburban sprawl? And the second one from Owen Carroll, who's here in the audience, it's for Michelle, but I think we'll ask it to all three. Could Josh's conclusions be possible in Ireland? Affordable housing, net zero, and forget about the luxury 2-bed apartments. So maybe if we could start with Michelle, how can we prioritise sustainable growth?
Well, I think the first thing to say is we need to prioritise development in urban areas where housing is in shortest supply, and also closest to our public transport nodes, and at higher density than we traditionally built at in this country. So in the past, our solution to housing affordability was in large measure sprawl on the edge of cities, but also a huge amount of one-off rural housing, which isn't a sustainable growth model. And in some ways, I think the challenges we face are related to the problem of transitioning from that model to transitioning to a newer, more high-density model. And that involves more people living in the suburbs and inner city of Dublin, Cork, Galway, Limerick, using public transport, using the services there, and that can create tensions for existing residents. One point I would make just around how we're achieving that at the moment, there is a huge emphasis in the planning guidelines on high-rise as a solution. And certainly because Dublin's primarily low-rise, we have to develop the remaining sites quite densely. There's no doubt about that. But there are also other building topologies I think we need to look at and try facilitate the development of townhouse complexes, duplexes, etc. And we should focus on amending the planning code to facilitate that. That would also bring down costs. The other issue is if we are going to develop, we need to address the key needs. The key needs within Ireland are particularly housing in urban areas, particularly affordable housing, and also housing for smaller households. Because we have the largest proportion of houses, as opposed to apartments, in our housing stock in the European Union by a long, long way. So we have very few small units.
And what about balancing affordability and net zero? How can we move towards that?
We certainly need to focus on the development of more housing which is affordable, particularly social housing, but also the kind of key missing part in our housing system at the moment is housing which is affordable for purchase and for rent for ordinary households on ordinary incomes. So certainly in terms of priorities, that's what we need to focus on. We also have an issue of very large proportion of vacant units within the Irish housing stock and derelict units. That certainly needs to be addressed. It would be more environmentally sustainable. The problem with that is quite a lot of these units are not located in the population growth centres. So there is a strong argument for addressing vacancy and dereliction, but in itself it's not a solution to the housing shortage in this country.
Okay, thanks, Michelle. Dermot, would you like to add anything in terms of moving away from compact growth to, moving to compact growth?
Yeah, I mean, I don't think anyone can disagree with the motivation to reverse or at least slow the sprawl that we've seen. I drive out to the suburbs every day with other kind of dubs out to the outer reaches of the county and beyond the county border, because that's where the housing is. But I agree with Michelle in terms of what she's saying around the typologies. This kind of goes back to some of the stuff that I was talking about in relation to the cost and viability question. When you think about density in Ireland, because of the way in which the rules are set, it kind of generally has to be apartments, and then we have viability and cost issues. So I think we do need to look at other types of ways to get higher density with not necessarily a higher rise or focusing on the apartment side. So I think that's where the focus needs to be. And I absolutely wouldn't give up the goal of that higher density, especially in Dublin.
Okay, thanks, Dermot. Josh, would you like to add anything? Would your ideas work here in Ireland, for example?
Well, I think the first place to start would be some sort of mapping exercise of
the emissions associated with the Irish housing stock and against your carbon emissions targets for 2050. I don't know if that's been done. If you don't know what they are, then it's very difficult to intervene in a way that's effective. Of course, I'd agree with this idea of greater density. If you look at a city like Barcelona, for example, very high density, but it's a great city, it's a great place to live. There may be cultural issues to overcome in terms of a sort of norm of having your own piece of land in Ireland that may be politically challenging, I imagine. But there's no real alternative, I don't think, if we are going to stay within planetary boundaries.
And what are the kind of infrastructural implications of a more dense housing construction?
Well, there'll be more pressure on public transport within cities, and I think we need to move away from a sort of car-oriented transport infrastructure towards public transport, cycling, walking. Actually, London is managing to do that quite well over the last 10 years or so. Huge increase in journeys to work on bikes. I think that's the way forward. It does actually make the city more pleasant to live in if you have less cars.
Okay. I have another question that is directed to Josh here. The person would like to ask Josh about top-down deagglomeration policy, a German type of approach as an answer to the issue of land elasticity. Could that solve some of the problems?
Sorry, top-down what did you say?
Deagglomeration, I think it is. Is it? Yeah.
De-agglomeration.
Yeah. Sorry.
I haven't heard that word before. Yeah, I'm not quite familiar with that term, but the German planning model, the advantage of the German planning model, I think, is they do provide municipalities or regions, the Landers regions, with quite a lot of control over how they develop. So you have this kind of plan-making approach where the municipality can, has control over what happens over quite a large area, whereas certainly the UK planning system there's a lot of sort of very local discretion, and it's easy to block things from happening, and it's quite a sort of cumbersome process where local authorities have very little ability to say put together some different bits of land in the same space to actually do something ambitious in terms of, say, a mix of affordable and market housing. So I think the German model has a lot going for it in that sort of decentralizing control and power.
Okay. And just while we're on the issue of land, Dermot had said maybe land cost isn't the big issue. Would the other speakers kind of agree or disagree with that?
Well, I'd quite like to hear from Dermot where he got those very low land cost figures from and the methodology behind that. But yeah, it did seem quite low to me.
Yeah, well, I mean, they're from publicly available sources, so the accounts of the PLCs that they publish them regularly. And in the case of the Irish House Builders, the same. So the argument, just to kind of maybe kind of develop this a bit more, it has been the argument for many years that builder developers can make their money from just buying land cheaply and then selling much more expensive homes. Land values go up over time. The kind of arguments that you were making. That has been the case, and as I said, that's why I'm totally in favour of land use, proper active land use policies to actually reduce that. And I'm not arguing against reducing land further. I think that would be a good thing overall. But my point in this is that it is not the factor that's going to solve all our affordability problems in the housing market. So that's the argument I was making there.
Okay, Michelle, would you have any view on that?
I suppose I know very little about how builders, developers manage their land banks, I must admit, but just on the wider point, I think land availability and active land management for social and affordable housing is really critical. And if you look at some of the mistakes we've made in the past, I think failing to actively manage land availability is a key one. So in the past, local authorities would borrow money from the Housing Finance Agency to buy land, and then the land would be, the loans would be paid off when they built social housing on them. And that model became very difficult to manage after the crash when social housing budgets were cut. And lots of local authorities haven't added to land banks. And AHBs, approved housing bodies, face challenges in buying land or accessing land in an affordable way. So this is a problem because it limits the capacity to build social housing from scratch. And that lack of building from scratch is a problem because we're taking dwellings from the private sector to move into the social sector. We're not adding to supply. But the bigger issue actually is the type of dwellings that the private sector are providing for sale are generally 3-bedroom houses and larger. And the vast majority of people on the social housing list are 1 or 2 person households. And most of the existing social housing stock is 3 bedrooms and larger. So the size of dwellings is not meeting the need. Most homeless people are single men. Many of them could spend 20 years on waiting lists at current output. So we need to manage land banks more actively. I was really enable AHBs and local authorities to buy land, and also the Land Development Agency needs to play a really active role in land banking over the long term, and then making that land available to approved housing bodies and local authorities.
Okay. And while I have you, Michelle, there's a question here around tax policy. And what types of changes to tax policy would you like to see? And I'm going to ask the other two as well, but as it was directed to you, I'll maybe start with you. Sounds like an interview question, doesn't it?
It sounds like an interview question. Sorry, I'm racking my brain. Can you ask the other two and come back to me?
Okay.
Yeah. You mean in Ireland?
That's just for.
Yeah, because my
Ireland.
presentation was international.
Yes.
And we already have abolished mortgage interest tax relief.
Right.
Even though some people are arguing to bring it back, which, by the way, we shouldn't bring it back.
Josh, would you have any views on tax policy that helps to finance, housing in a sustainable way?
Yeah, so I think we need to really rethink property taxation from the ground up, to be honest. I mean, in most advanced economies, we have a sort of form of home ownership welfare state, basically, where our primary residence has received there's no capital gains tax on it. There's, in most cases, extremely low annual or no annual property tax. In the UK, we have council tax, which is based on values from 1991, when we've seen 400% increases in house prices. So we need to be taxing the increase in the land value of where you live on an annual basis, which has nothing to do with you. It's to do with investment in the area by the public sector, by the private sector. It's economic rent that should be taxed. There's agreement across the economic spectrum between right-wing and left-wing economists that that's the most efficient form of tax. But we've also got to think about taxing in a way that encourages us to make our homes much more energy efficient. So I would be looking at some sort of green land value tax, where you would reduce the tax if you've got a very well insulated home, for example, or you're renting out your spared bedroom, because that's a way of supporting the problem with affordability. And that's a sort of win-win in terms of both reducing carbon emissions, supporting affordability, and increasing the productivity of the economy, so that people put their savings into firms and the stock market, not into housing.
I agree with that. We were in agreement on that one. It's all about incentives. I mean, if you give an example of a tax that was introduced but not implemented properly in Ireland, it was the vacant site levy over the last number of years. Hopefully, with the changes that are being made now, it'll be properly used as an incentive to use land in the most efficient and proper way. The green point is actually an interesting one in terms of incentives as well.
Okay, a final question, and maybe I'd address it to Michelle. Why is the LDA delivering housing rather than facilitating the many local authorities and approved housing bodies?
I suppose I don't accept it is. I am a member of the LDA board, so I haven't. So I'll just comment on the LDA's approach, and certainly my view of it. I don't accept it is delivering housing rather than supporting AHBs and local authorities. I think it's doing both. So the LDA has plans to deliver around 2,000 units a year for the next 10 years, and it currently has 2,400 and something units in planning. And we've just started building this week in the Shangana scheme in Shankill. So all of those developments are on, well, firstly, they're all in large towns or cities because the LDA is confined to operating there, and that's where the major housing shortage is. Secondly, they're all on brownfield sites or difficult to develop sites that require master planning, etc., and wouldn't have been developed otherwise. So the LDA is planning a major development in Limerick around Colbert Station, the main train station. That's in master planning. There's a similar scheme in Dublin, and a similar scheme in Galway. There's a similar scheme in Dunor Avenue in Dublin 8. They're all very large master planned developments. So in that sense, we're adding to supply. The other area of the agency's work, which I mentioned already, is land banking, which I think is the real missing part in terms of housing policy. So next month, the agency will launch its map of state lands, which is one of its statutory functions. And it is assembling land from state lands, from land transfer, and also through some purchase on the market where necessary. So that's actively underway. The next phase, which we definitely need to concentrate on, is making that land available to local authorities and AHBs. And since we have a presentation on Vienna after coffee, I mean, one of the many things Vienna does very well is this issue of active land management for social housing and land banking, and they distribute their lands to social housing providers, the Vienna Land Banker, by something called developer competitions that look at value for money, but also social purpose. Is it meeting environmental targets, providing the right type of affordable housing? So that's a model I think the LDA should explore. So we have an open, transparent, and also cost-effective way of making land available to the social housing sector.
Thanks very much, Michelle. And just to plug at that, we're currently doing a land series as well. Details of that are on our website, and we're doing that with the Geary Institute and the Land Development Agency. So they're kind of lunchtime 1-hour sessions, which have been going on since October, and you can get the back dates of that on our website as well. So sorry, Michelle.
Oh no, and I was going to say the next one, which is in January, actually looks at this German model that Josh was asked about.
Okay.
So
Geico. Okay, so we're ahead of the curve there for once.
Yes.
Okay, so we're going to break for coffee now for 20 minutes, and we'll be back at 10 to 11. I just want to thank our speakers very much for their input and for the questions that we've got from our participants. And thank you all very much. Thank you.
Continue that and keep the momentum going on it. So I suppose we're going to concentrate in or hone in a bit more on housing now and sustainable communities. And I suppose this is a subject that's quite close to the agency's heart. For those of you that don't know, our full name actually is the Housing and Sustainable Communities Agency. So I suppose this is a subject and a session that we welcome hugely. The Minister started the conversation this morning on sustainable homes by referring to the programmes that are being rolled out, and also talking about schemes such as Croí grants for the vacant properties that will contribute to, I suppose, recreating sustainable communities around the country. We are joined for this session by 5 speakers, national and international speakers, who'll give their perspective on the subject. And hopefully I'll be as expertise as David was in the chairing this morning, and we will have a decent length of time. I think we've allocated 30 minutes for a Q&A at the end of this session. So our first speaker, we have not left anything to chance, because we have two remote contributors to this session. So in the interest of internet and just making 100% sure, we have the first two presentations are actually pre-recorded, but both people will be available for the question and answers towards the end. So our first presentation is from Gulnara Roll, who is Regional Advisor at the United Nations Economic Commission for Europe. She is in the Forest, Land and Housing Division. She supports national and local governments in the UNECE region with policy advice, and she has been working with the United Nations since 2009, and you can read more of Gulnara's bio in the brochure. Gulnara is going to talk to us about what the UNECE is doing about housing and Housing 2030. So I'll hand over to Gulnara, pre-recorded now. Thank you.
Dear colleagues, I'm very glad to welcome you at this conference on behalf of the United Nations Economic Commission for Europe. The United Nations Economic Commission for Europe is one of the 5 regional commissions of the United Nations. It's an intergovernmental body also dealing with topics of affordable housing, and it brings together 56 member states, so senior government officials responsible for housing urban development in 56 member states in Europe, North America and Asia. I think the important aspect of the United Nations Economic Commission for Europe is that we act as a neutral UN platform to exchange experiences and best practices, including on sustainable housing. UNECE conducts regular surveys on housing affordability in its 56 member states. And what we really see is, so here on the screen you see the key concerns of representatives of the governments across the region, and you see that these concerns are really universal. It's a lack of financial provisions to support housing affordability. There is an increasing gap between income and housing costs, as well as social and spatial inequalities in access to affordable housing. So this is really the challenges all across the region from different levels in different countries, depending on the socioeconomic situation, depending on the legislation. However, we see that the housing affordability remains to be a huge concern across the region. What is also very important is that we see the great variety in the countries in terms of the role of the state in supporting social and affordable housing, and which brings us to the point of the importance of really tailoring different best practices and principles to countries and to the cities. So the key fundamental document that United Nations Economic Commission for Europe endorsed is the Geneva UN Charter on Sustainable Housing. It was endorsed by the UNECE in 2015, and it really ensures the fundamental principles, universal principles of promoting decent, affordable housing for all, promoting integrated approach to housing, sustainable housing, looking into the topics of environmental protection, economic effectiveness, social inclusion, and cultural adequacy. So all these 4 topics are very important in developing sustainable housing policies at the national local level. I would like to use the opportunity to thank our important partners, Housing Europe and UN Habitat, for very good cooperation on initiative named Housing 2030, Effective Policies for Affordable Housing. We produced a report, which probably you have seen, the Housing 2030, which includes 4 chapters on the 4 key topics that we as partners to this Housing 2030 initiative considered very important, looking at the housing governance, housing finance, access to land for housing, climate neutrality of housing. And you can see the information on the Housing 2030 initiative at its webpage. It is housing2030.org, where you also find podcasts, recordings of the thematic and regional workshops. So I really hope that Housing 2030 would be a very important resource also for Ireland in its developing of its housing policies and programs. The main messages of Housing 2030 are very clear. First of all, it's the importance of looking into the housing policies very intentionally through shaping a better housing system instead of waiting for the markets shape it for us. Looking at housing really as a basic needs and basic right of people, of everybody for affordable and decent housing. Looking into the housing policies as a very long-term policies. We also, in the Housing 2030, underline the importance of role of cities in creating livable neighborhoods through affordable and decent housing. The Housing 2030 also stresses the importance of the evidence-based policies for affordable housing and the importance of international cooperation. So this is really the main topics of the Housing 2030, which also have been addressed on the Regional Action Plan, which was endorsed last year by the UNEC Committee on Urban Development, Housing and Management. So the policy area B of Regional Action Plan is looking into the 4 topics of the Housing 2030. The policy area A of the Regional Action Plan is looking into the topic of the multi-level governance, the integration of the housing policies and programs at the city level, but also the importance of the local policies and programs looking at the neighborhoods and good conditions for living at the very local level in each city, in each village, in the UNEC region. We also organize, in addition to intergovernmental meeting, which is a committee on urban development, the sessions of the committee take every year in October, but also we're organizing Forum of Mayors. It is a meeting which brings mayors from all across the region, where the housing topic is also discussed in a very detailed way and looking into the city's approaches to housing. Finally, I just would like to say that we are looking very attentively at the policies of the Government of Ireland, and specifically at the Housing for All plan. For us, it is very important because it's a very important experience that the government has. But also, it is an important experience not only for Ireland, but also for other countries. So we're really learning, and we'll be very happy to disseminate this experience. Thank you very much for opportunity for me to present at this conference, and looking forward for the great discussion today.
Thank you very much, Gulnara. We're now some interesting food for thought. We're now joined again, as I said, in a pre-recorded presentation by, actually, I should say first actually that the Slido code, just to remind people of the number, that it's 3698595. So for questions for this session as well will be through Slido. Now we do have some mics in the room, but I suppose the preference is Slido because it gives people a chance to vote on the questions to be asked. As I said, we're now joined by Professor Brian Mark Evans, who is a city planner, a landscape architect, designer and urbanist. He's a professor of urbanism and landscape design at the Glasgow School of Art and director of Glasgow Urban Laboratory research group. He is an advisor to the UNEC, and I suppose it nicely tailors on from what Gennaro was talking about. Brian is going to talk about Glasgow and where it sits both nationally and internationally, as well as some Glasgow City housing policy.
Good morning, everyone. Thank you very much indeed for your invitation to participate this morning. I'll start, if I may, by making one or two remarks in terms of context. The first is that in terms of human settlement, I prefer to deal with the proposition around living in cities rather than the technical provision of a service or a commodity. Secondly, I should say something about the complexity of devolved government in the United Kingdom. In Scotland, Wales and Northern Ireland, all of planning, housing, transportation and health is devolved to, in Scotland's case, the Parliament, and the same with the other two countries. And then thirdly, I should say something about the geographic and cultural similarities, but also differences, not only between Scotland and Ireland, but also between metropolitan Glasgow and metropolitan Dublin. One of the differences, of course, is that Glasgow is not a capital city, and that has and can have both advantages and disadvantages in terms of governance and in terms of freedom to operate as an individual entity within networks of cities. I'll share my screen. And let me start, if I may, with this quotation from John Higgs' book, The Future Starts Here. I call it the Higgs paradox, and Higgs makes the point that if we are to build the city of the future, we must first imagine it. And what happens to our collective consciousness and mental health if the only futures we can imagine are apocalyptic and dystopian? So it's our job, I think, as professionals to find a way to represent the complexities of what we're dealing with today in a way that can give people hope for their future. This diagram from research published earlier this year looks at what I've referred to as the cocktail of change between demographic, climatic, and technological change. And we are all super sensitized just now to technological change and climate change, but we can forget the role of demographics and the significance that has in terms of bringing leadership to this cocktail of change, which has well-being at its center. Demographic change in Scotland is interesting. The map in the center shows in green the only areas of Scotland that are growing, and with the exception of the outlier of the Orkney Islands, this essentially means the principal cities of Aberdeen, Glasgow and Edinburgh, and in Edinburgh and Glasgow's case, the city regions. And in the little graph at the top right, you see how Scotland's population grew and then has begun to decline, directly related to EU expansion and to Brexit. And in the table on the left, you see how over the past 50 years, Scotland's population has grown by 5% compared to, for example, Ireland's population growing at 67%. And this dichotomy provokes different issues for us both and how we handle these. I'd like to go back to first principles to the United Nations Agenda 2030, which introduced the Sustainable Development Goals. And in particular, Article 2, which stresses, amongst other things, the people-centered nature of the SDGs, and Article 5, which stresses that the SDGs are integrated and indivisible. And therefore, if we want to deliver on any one of them, such as SDG 11, in terms of sustainable cities, we must also think about how that contributes to all of the others. In the three circular diagrams in the center of the slide, there is the rows of the SDGs, and in the center, the relationship of the SDGs to Scotland's national performance framework and the 11 strategic outcomes for the country, which are intended to deliver on the SDGs at a Scottish national and also at a local level. And in the diagram on the right, you see Glasgow's climate action plan and the 5 pillars of that related to the SDGs. This slide shows the evolution from Agenda 2030 through to the Regional Action Plan for the United Nations Economic Commission for Europe area, which United Nations colleagues will have touched on earlier on. And the Regional Action Plan updates the 2030 agenda and puts in place policy targets and actions for delivery in terms of the Geneva UN Charter on Sustainable Housing and Housing 2030 research. Now, this rather complicated diagram maps out those bodies of policy, and on the left in blue, the policy areas related to land, governance, finance, and climate neutrality, driven from the Geneva UN Charter and Housing 2030. And on the right, the documentation of city, neighbourhood, and home policies related to sustainable neighbourhoods, citywide integrated action, and coordinated national, subnational, and local action. That I was in the fortunate position of being asked to help with the coordination and delivery of the action plan. When we bring this to the Scottish level, we can see that the National Performance Framework for Scotland seeks to take the Sustainable Development Goals and turn those into 11 strategic outcomes with a number of detailed outcomes to deliver on the SDGs. And on the right, you see recent policy guidance from the Scottish Government about outcome-focused policy making in Scotland. All of this is predicated on propositions of place. The Scottish Government has a national place policy that's based in part on the principle of place, and secondly, on what's referred to as the Place Standard tool, which is a tool for developing dialogue with communities to help empower communities to engage with all of these attributes of their place and how they think they might do something different about it. The place principle in particular relates to joined up, collaborative, and participative processes and approaches to services, and tracks back to the integrated nature of the SDGs. Just recently, we have had laid in front of the Scottish Parliament National Planning Framework for, not to be confused with the National Performance Framework, which deals with the planning delivery of SDGs spatially across Scotland, and in particular is related to the delivery of outcomes from the National Performance Framework and the principles and targets of the SDGs. And the icons you see grouped together under the headings of sustainable places, livable and productive places, relate to those outcomes from NPF and also from the SDGs. And in the little map on the right, it shows the distribution of national developments grouped together under sustainable, livable, and productive places for achievement of these outcomes and targets. And I've highlighted in red the Glasgow City region, which is the principal area of operation that I'm concerned with as Glasgow City urbanist. Continuing and relating this to sustainable housing, Scotland has a national housing policy for 2040, illustrated on the left here. And in the centre, some of the policies contained in the housing policy, which can be tracked back to the National Performance Framework and to the SDGs. So there is an express relationship between policies and national outcomes in the Housing 2040 policy in order to help Scotland achieve its objective of carbon neutrality by 2040. And I should say that Edinburgh and Glasgow have set out even more ambitious targets to try and achieve carbon neutrality by 2030. So when I was appointed to act as city urbanist, I suggested that we might have a place commission around about the city and the city region to think about what this means in terms of all of these outcomes, these policies, and how we might go about it at the city and local level. I feel that place, we all know in principle what is meant by place. It's a ubiquitous term. It's a little bit like beauty or ugliness. We generally know what we mean, and at a strategic level, using place connotes proposition of belonging, connotes our environment, the way we live. But when we move down the scales and we get to the local level and empowerment of communities, we need to be more precise what we mean about placemaking and place management. And we perhaps need overarching principles around about which we can build consensus in order to deliver on propositions of place, to in turn deliver on outcomes from national and international policy. We started as a commission to look at issues related to place quality and place value, and we founded on Matthew Carmona's research from the Bartlett School, which gives form and definition to place quality and place value, and increasingly the proposition of place attachment, the emotional attachment to places, with outcomes specified in more detail related to health, social, economic, and environment. And we did this through three lenses of the international city, the metropolitan city, and the everyday city. I should say something in particular about metropolitan Glasgow. It seems to me described here as the bigness of Glasgow. In the map at the centre of the slide, you'll see Glasgow City and three surrounding local authorities, which corresponds to the construct sometimes referred to as urban agglomeration, or to, in other areas, to conurbation, for example, and in Britain, it's referred to as the primary urban area. The population of Glasgow City is 620,000. The population of the city and the three surrounding local authorities is about 1.2 million. And I've referred to Glasgow and the other three principal cities of Scotland being located between the sea and the hills, but Glasgow is the only one of the four cities that's surrounded by itself. And the population of the city region with the other four local authorities is about 1.8 million. The other thing I wanted to touch on here is the international dimension of Glasgow. And I've highlighted on the left some of the attributes of Glasgow's internationalism and the fact that Glasgow is an arrival city. But the most important thing here probably is the everyday city, which is about the sum of small things, how we live our lives, how we interact with fellow citizens, visitors, and businesses within the city. As we go down the scale, this map shows the duress and the shatter zones we refer to as in Glasgow and in Glasgow's form as a consequence of modernism in the early, late 20th century. In red, you see the consequences of deindustrialization in particular, and also the integration of major infrastructure in the motorway network. And in dark grey, you see the consequences of comprehensive redevelopment, demolition, and constructing modernist propositions. Both of these two sequences of policy, national policy, have resulted in Glasgow having a fair amount of vacant and derelict land, which has been a challenge for 50 years. And finally, we think we might be turning the corner with respect to that. The other aspect of this map to point out is the 4 peripheral estates where the city of Glasgow sought to provide an antidote to the depopulation of the city through national policy, euphemistically referred to as overspill from the city. In the engagement work that the Place Commission did, we sought to understand place in respect of an ecosystem and looked at the role of the citizen, looked at the role of places within the city and the hierarchy of those places, the protagonists who have something to do with acting as agents for change, and the hierarchy of policy internationally, UK nationally, Scotland city region, and so on. And we sought to think about that ecosystem and indeed to learn from place and learn in particular from Glasgow, which was something that came through strongly in the engagement. And the conclusion was that Glasgow has had 3 notable achievements in the last decade of the 20th century and the first 2 decades of this century: cultural regeneration, area regeneration, and social and affordable housing, where, with some justification, we might be regarded as UK national leaders, and owe much more to the European approach to social and affordable housing and housing associations than to a strictly private sector model. These 2 maps of the geography of Glasgow show on the left the distribution of local centres and the 20-minute neighbourhood, and on the right, the place projects that we identified to illustrate through a sequence of place stories these successful aspects of transformation over the last 30 years in Glasgow and how we might take those forward. And this is all documented in detail in the report, and there's a QR code here to allow you to, should you be interested, to download the report and look at the methodology. I think that the place stories, of which there are 16, has been a particularly successful aspect of the work. The 2 in the top left here, New Gorbals, you may have heard of, which is a comprehensive regeneration and transformation of living in an area of Glasgow that has seen everything visited upon it, and Monteithro as well, shows heritage regeneration and new intervention in respect of social and affordable housing. The place stories give people and citizens a means to engage with all of this policy and a means to relate to that and feel that they can, in their own way, participate in the aggregation of the sum of small things. And I should also mention in the bottom right here, the Woodside Towers, which is a successful project that has brought about the regeneration and not quite carbon neutrality, but nearly, for 3 tower blocks and has radically improved their energy performance, and they are extremely popular with the residents. So we did a lot of analysis about the characteristics of these place stories, and again, all of that's set out in the report in order to build the evidence base related to the policy cascade I've been describing, but to make that real and to build some recommendations for taking forward place across Glasgow City and across the city region. As I move to my last couple of slides and bring it back to the subject of the conference in terms of sustainable housing, these 2 maps are quite interesting. The little icon on the left shows you again the 8 local authorities with a population of 1.8 million. And the diagram on the left, the map on the left, shows the geography of carbon retrofit, where the lighter the shade, the lesser the challenge of carbon retrofit. And much to everyone's surprise, Glasgow City, which was considered intuitively to be the area that had the greatest problem in terms of home retrofit, has turned out to be the local authority with the least challenge in terms of carbon retrofit. The map on the right shows the inverse relationship. Again, the lighter, the better, the darker, the more the problem, with the geography of disadvantage. So there's an inverse relationship between the geography of disadvantage in Glasgow City region and the geography of carbon retrofit. But what it does do is demonstrate that the investment over the last 20 to 30 years, in particular in the housing stock transfer that took place early in the 21st century, has lessened the challenge of carbon retrofit through the policy of social and affordable housing in Glasgow and South Lanarkshire, addressing the geography of disadvantage and the areas of social and multiple deprivation, and how this is building a platform for the transformation in the city, going towards a just transition towards carbon neutrality. So in conclusion, if I could say that all of this work is about overcoming fragmented policy, trying to bring coherence to it, trying to bring sense to the vertical and horizontal integration of the SDGs. And by that, I mean the integrated nature of the SDGs at any level of government, and the vertical integration between what is seen as international leadership. And after all, nobody disagrees with the SDGs, or you never get anybody to disagree with the SDGs. So we're on fairly firm ground if we backtrack towards those and show how we are delivering on those, their targets and the national outcomes at the local level. How we build a consensus around about overarching principles that are capable of addressing the paradigm shift of change, that cocktail of change that I introduced the slides with, and how we handle that paradigm shift, and perhaps in the process provide hope to people to be engaged with their place and their community. The place, at least in Scotland, is the principal game in town, but it does put huge emphasis on leadership and bringing people and empowering people in the process through capacity and building a place ecosystem for the delivery of these propositions. And finally, that we should think about living in the city rather than housing policy sector delivery. Thank you very much.
Thank you, Brian. That was very interesting. A lovely way to describe your city as an everyday city and being a sum of a number of small things. I'll also look forward to, as part of the Q&A, talking to Brian maybe about how they're turning the corner on vacancy. Just a reminder of the Slido, again, it's 3698595. You think I'd know it off by heart by now, but 3698595. 3698595. Our next speaker is here in person, Michaela Cower. And Michaela is from Vienna. You can read her age if you want to look at the bio to see what age she is. Michaela has long work experience with the city of Vienna, and she was assigned as director at the Brussels Liaison Office of Vienna in 2009. This office has a leading role in the city's EU affairs, and Michaela also represents Vienna in the Executive Committee of Eurocities and works closely with committees of the regions. She has extensive experience, and as I said, you can read a little bit more about Michaela in the bio or in the brochure. Michaela's going to aim to discuss Vienna in about 15 minutes, 20 maybe. Or thereabouts, and also talk about how the learning from Vienna can be upskilled at European level. Thank you, Michaela.
Yes. Hello, everybody. The first thing I have to do, even if I use a little bit of my time, is take a picture of you. Because you are the important people here. First of all, I would like to say happy anniversary. This is a great occasion to be here again in Dublin. I remember very well when we were here just before the pandemic in 2019, I think it was, when we had the Vienna exhibition here. So some of you may have been there, and I was delighted to see that it also found its way into the little anniversary brochure. Technicians are going to hate me because I'm making noise with the microphones. I would like to also give you the warm regards of my mayor, Dr. Michael Ludwig. He is in office since 2018, and he was the city councillor responsible for housing before he became the mayor. So he's very interested also in continuing the exchanges that we have set up since many years between Vienna and Ireland and Vienna and Dublin. But coming to the theme, and I'm hoping that this is the control device, I guess, yeah. Just a little bit about Vienna. We are a growing city. It has been mentioned already by former speakers. We are going to be like 2 million of people in a few years again. It's slowed a bit down, but we are really growing fast. And we are also growing in the Vienna region, which is a cross-border region, because it expands to Lower Austria, which is the region surrounding Vienna, Burgenland, which is the region close to Slovakia and Hungary, and also even goes back to Bratislava, Slovakia itself, Vienna and Bratislava being the two capitals in the world that are closest together. We're just like 40 kilometers away from each other, and that also creates links with regard to a housing market. We are well known for being one of the cities with the highest quality of life since many years. We are proud of that, but we are also convinced that this is nothing that just falls from sky. And you have to do something for that. So what my plan for you today is to explain a little bit about the Vienna model of social and affordable housing, how we did it, where we come from historically. I guess most of you are aware of that, but going also into instruments. I think it's important because we've been talking a lot about financing, about land use, about land banks, things and instruments that are really, really vital with regard to creating more social and affordable housing for all. And I would like to go into that as well. And we'll talk about governance, because I think that there's a big difference between the Irish constitutional division of competences and what we do have in Austria. But I think it's important also to look into governance instruments with regard to housing. So looking a little bit back into history, we have now a stock of housing today of 220 municipal dwellings, units, but it started all right after World War I, when the first housing program was set up by the then city government, and they built 66,000 dwellings, out of which one of the best known, I guess most of you have seen that somewhere, is Karl Marxhof, which is the longest 1 kilometer long municipal dwelling that we have in Vienna. So 1 in 4 citizens in Vienna live in municipal housing. 2 in 3 in municipal, cooperative, or other publicly funded housing, which means that for us, it's a quite normal thing to be in municipal, social, cooperative housing. We are, in fact, today standing at a unique combination of quality of life, price effects, capped rents, controlled rents, regulated rents, tenants protection, empowerment of people, participatory approaches, both with regard to the management of the house, but also with regard to the design of the neighborhood. And that leads to job creation and social mix in our city. And social mix and social cohesion are one of the core goals of our housing policy. So I think that going into that will lead us immediately to the next comment I would like to make about governance. We have something in Austria, and there's this little brochure outside comparing different models. We have something in Austria which is called, it's a horrible German word, it's called Wohnungsgemeinnützigkeitsgesetz. So in Austria and German, you have these words that tend to have like 10 kilometers of length. But in fact, if you literally translate it, it's kind of housing is for the common good law. It's an act, a national act, that says that we have to have housing for the common good. Typically, it would be translated into something like not-for-profit housing, but that's not really describing the idea behind. The idea is that housing is something that has to serve our communities, our societies. And built on that, each of the 9 provinces has their own provisions to do their housing promotion programs, their housing promotion funds, to set up funding instruments and others. For Vienna, this is the Vienna Housing Promotion and Renovation Act. So we are always tackling, because we are a city which is quite old. Not me, I'm young, of course. But the city being really built, many of our buildings coming from the late 19th century, clearly. So we had also a need to renew our housing stock in starting from the 1970s. We did something that was called the Gentle Urban Renewal Strategy. And this is why I'm coming to this high number of people who live in some form of publicly funded housing, because clearly at that time, the private housing stock was in a bad condition. We're talking the 1970s. And they had to be renovated, but the landlords could not do it on their own, so they needed loans and guarantees and instruments, which the city then provided. And any time when the city provided instruments or loans or guarantees, they were doing it not unconditionally. Anytime the city takes money in their hands or instruments in their hands which are for the common good, we also have binding conditions for those who profit from that, which means that each of the houses that have been renovated at that time, since that time, they have to give us back at least a few flats that we can use for people in need of affordable housing. So, and also the rents keep being capped for the duration of the loan, and these kind of things that have been very common in many places. That's something that we are very proud of. There's been we have the Wiener Wohnfonds, which is our kind of land bank, which has been buying land across the city since many decades, and we are still profiting from them, when today we have 14,000, 15,000 units under construction. We provide the land for those new development sites. And what we typically do, it has also been mentioned, we do the developers competitions. In the moment that there is more than a certain number of flats being constructed, we make a competition among developers. And among those developers, we will also always find one of our 52 cooperative associations, housing cooperatives, who are also coming into these competitions. What makes it easy for us to also maintain the high number of cooperative, municipal, and affordable flats, in fact, is that we introduced a new zoning category. I don't know if you're aware with that or familiar with that, but in our building code, we have different zoning categories in the urban development plan. So you have the green zones where you need to have schools, where you need to have housing, etc. And there is a zoning category now that is called subsidized housing. And any new construction site today must have 2/3 of subsidized social and affordable housing. That's a lot. And I would say the institutional investors came to our director for the construction a little time ago. And then they asked him, well, that's 60%. I mean, that's a lot. And they were complaining, and it's not easy, and you have to fulfill so many criteria. That's annoying. You have to take care of social infrastructure and health infrastructure and help with the educational infrastructure, and you have to make a contribution to the general infrastructure below ground. So it's all a little annoying for the investors because it's limiting their profit. But our director of construction said, well, we can go to 80% if you are annoying me. And this is the way we do it. We try to keep the things under control that are going on in our city. Voila. I'm going the wrong direction. This is not good. Yeah, so I did that. I'm not really doing this well, I think. Wait. Yes, I'm not skipping a few. In fact, what we do, we have a housing market, as I told you, where we have half of the market under control because it's either owned by the city or it's cooperative housing. And we have, of course, private rental a lot. Typically, we're a city of tenants in Vienna. So when I listen to the stories of Ireland, everybody wants to have their own house with a little garden. This is something you can have that in Austria, but not in Vienna. You could have it in Vienna, but it's not the normal thing. It's okay to be in municipal or cooperative or rental private housing without a garden. We are used to live in apartments and live together with our neighbors. In fact, it had a positive effect during the pandemic because a lot of old people who were living alone were helped by the people who were in the house. And there was, the neighborhood has been like reinforced, and this feeling of belonging together has been reinforced in the pandemic when people were helping each other to do, the shopping for the old people in the house. So I think it also has a lot of, good elements to be in an apartment, and maybe this is something that you should explore when you're talking about more density in your housing programs. Now, there are clearly a lot of reasons for the housing crisis in European cities. So I'm coming a little bit to the European level now. We've been talking about that lacking investment has been something, financialization, including money laundering, touristification, the whole issue of the short-term holiday rentals. We all share these concerns about the high cost of construction, the workforce that is not there anymore because people went back to Poland or other countries during the pandemic. People are missing now in the construction labor market. So there's also little appetite for state intervention, and there's low regulation in general in the housing markets. So all of these are things that we share with a lot of other places, countries and cities across Europe. What we found out in our work on European level, in something that we call the European Agenda Housing Partnership, where I've been the coordinator of, is that you're the better off if you have greater diversity in your housing system. And this is where we developed the so-called housing continuum. We will share, of course, the slides. But in the housing continuum, we have said, okay, if you look at the whole spectrum of affordable housing, which is the little three points in the middle, in the center, you will find social housing can take different forms. Very often we talk about social housing that is stigmatizing people, right? I mean, in France, think of the building blocks which are called HLMs. Nobody wants to live there because your address is like a code for not taking you for a job. Yeah? And people wouldn't like to give their real address sometimes. So stigmatization is a problem very often, but looking into what cities and regions and countries have developed in the past 100 years, I must say, you find a lot of interesting models under the framework of social housing, like social rental agencies are a model that works very well in many places. Under the affordable rental housing, you will find the whole spectrum of also rent control, tenants protection. You can have charity housing, like very often in the Anglo-Saxon field, but you can also have company housing, something that has been coming back in the last years. Many big companies have provided flats for their employees because they couldn't find housing in the private sector. So cooperative housing as one of the I think, best models because it combines the idea of owning something without owning it in the sense of property owning, but you get a share of a cooperative, and that allows you to have an apartment or a house which has a controlled rent, even after the loan is paid off. So cooperative housing is, in modern words, we would maybe say it's what do you call co-housing, or give it new words, but it's cooperative housing in the classical sense. You own a bit of it, but you also rent a bit of it. So it's a model which is very. I live in such a flat in Vienna since many years, and it's perfect. And it allows for a lot of participatory models also for those who are living in there. Yeah? And then, of course, you have also the spectrum of affordable home ownership, and I think this is something that you are talking about a lot at the moment in your country. So again, there is a broad spectrum, and we have to be aware that as the broader we have and the more we have of all these solutions, the more crisis-proof we will be. We have seen a global financial crisis. We are in permanent crisis mode, aren't we? We have seen a global financial crisis. We have seen a pandemic. We have seen all of these things coming up. But what we need is, in fact, models that are crisis-proof and that also allow us to combat climate change. So I'm using too much of my time because this is red, and this means that I'm talking too much. Yeah, not nice. Anyway, so I just want to highlight one last thing. In Vienna, we are proud to live in municipal housing or in cooperative housing. We are not ashamed to do that. We love it. We have songs. We have TV series. We have a theater. We have a core of all the people living in municipal housing. So what we do basically is we are trying to upscale this to the European level. And my last message to you is, you are not alone with your problems. We are not alone with our problems. We are not paradise, but we have found a few solutions which seem to work quite well. And what we could do together, both as agencies, as countries, as cities, is go to the European level and do things together, combat. Ask the European Union for measures against financialization. Ask them to combat money laundering. Ask them to do something about short-term holiday rentals and the growing appetite of real estate investors in our cities. And ask them to really help us in delivering on the climate and social goals that we all need. So doing this together, I'm happy to continue the conversation and the collaboration between Vienna, Ireland, and Dublin. And sorry for taking so much of my time. Thank you.
Thank you very much, Michaela, for a very interesting and energetic presentation. And I think nobody will complain about Michaela going a little bit over. And I think we didn't notice the time passing. Our next speaker now is Valerie Mulvin. And Valerie is a co-founder of Colm Mulvin Architects. She's one of a generation of Irish architects who, through her work, teaching and research in Ireland and Europe, have brought a new spirit of architecture to Ireland, and she features in Housing Unlocked, and she's going to take us through some of her views now.
Thank you very much, and good morning, everybody. Thank you, first of all, very much for inviting me. We're kind of going from the global, where we started with the UN this morning, very much down to the local. And this is, I suppose, we have called our project in Housing Unlocked, Join the Dots, 100 Small Ideas for Sustainable Change. And in a way, the project came out of a book that I published during lockdown, which this is the cover of it. It's called Approximate Formality, The Morphology of Irish Towns. And they seem to me like a forgotten phenomenon of our landscape, some of them very successful, like Westport or Abbeyleix, and some needing love and attention, like Mount Rath or New Ross. And the timing was very apposite for the book, lots of interest, not just that these were uniquely beautiful spaces, they have amazing potential, part of our cultural landscape, and that they must be reused to survive, but it did coincide with the pandemic. And a catalyst really happened for a huge change of mindset. And we now know that people can work remotely. And in fact, many people left the city at that time and simply went home. And then they began, in a kind of a brief moment, to reimagine their lives. And people found cheaper housing, no commute, and an instant community. So in a sense, it's very interesting, all the discussion this morning about placemaking, for example. When you talk about this kind of work, it's not necessary because it's already there. So this project is about suggesting a pilot project as a demonstration as to how to unlock our housing potential within existing towns. And it's very important to note that vacancy and dereliction blight huge numbers of them. They were among the best environments in Europe. They got scale, community and materiality just right. And why are they derelict now? And I think it's really because nobody's thinking about them with imagination as the brilliant spaces they could be. There are, as Brian Evans described, a cascade of policies about towns and town centres, but few of them are really delivering on the housing side. There are issues of retaining character, but more importantly, there are issues of focus and drive and banging heads together at a public level to help people do obvious things. So that would help us bring our towns back to the wonderful, viable places they could be. Depending on who you ask, there's 50% vacancy between upper floors and whole buildings on average throughout Ireland. That's 50 to 90,000 units of housing. And in the middle of a housing shortage, clearly there's an untapped potential waiting to be unlocked. So during the pandemic, we and a few other architects were asked by the Irish Times actually to imagine how we could improve outdoor amenity at a time when people needed it more than ever. And that was the beginning of this project. So coming out of the research on the book, we chose Mount Rath in County Laois, but it's very important to say this could be anywhere. The town, which was founded by the Coots in the 1620s or 30s, it expanded rapidly, beautiful houses, including some 17th century ones, which are relatively intact. This is a 1950s aerial photograph, which crystallises the town in its form before suburbanisation blurred its edges. There was a market house on arcades in the square. It was demolished for traffic flow in the early 60s, and the town lost its centre, and that's now just a traffic island. So we thought Irish towns are already a set of potentially amazing but underused spaces. What do we need to turn that around? And what we did in our unit was just literally to show, if you turn the lights on, what could this place be? So the town becomes an urban and social theatre. It's partly new, it's partly reused. Old buildings become valued resources. Upper windows around the square are occupied, and the square is repaved. And we suggested rebuilding the market house on its original footprint as a contemporary public building of a new type, like a public hall over an open market space, or a new community or retail model supporting a sustainable and healthy lifestyle. So that was like a seed planted at the back of our minds. And when there was a call from the IAF to make a project about housing, we thought it would be great to join the dots and put together underused space and potentially fantastic amenity to make a contribution to the housing shortage. It's not a magic bullet, it's not going to solve everything, but it's a tiny idea about lots and lots of imagination. And at the same time, a modest investment and a thought in the towns themselves would not just secure these important cultural spaces for the future, but provide lovely environments for people to live in. And they're the kind of spaces, when we go on holidays in Spain or France or Austria, that we love. And so why not here? So we decided to ask questions about what was stopping people living in these amazing instant environments, invigorating existing communities, and bringing fresh thinking. And I think the most important thing to say, and I think it's really, it's the subject of this conference really, is that housing is not a single issue. It's not a self-contained thing. It's not a commodity. It involves everything. It involves how we live, how we socialise, how we meet, how we live as a community. And that's where I think the significance of this project has, because it's not just about providing homes, it's about making a way for people to live in a happy, healthy way. So we think of the town itself as a catalyst for change, able to provide the amenity if we just activate it, by people's own agency, which I think is really important. So we're proposing in our project for Housing Unlocked, taking Mount Rath, we're proposing backland development, people living over the shop, living in the shop, infilling empty sites, building live-work units, making new models of housing which add density and interest to the experience of the town. Placemaking, as I said, isn't required because it already exists. The infrastructure is already there. That reduces life cycle costs. The spark between new and existing fabric really delivers radical conservation, and it's full of innovation and ideas to do something like this. So in parallel, we tie the revitalised town to the existing infrastructure and new green networks. Towns have very strong geometric plans in Ireland. There's an organic pattern established on the landscape with spaces for growing, for markets, for animals, and people are the kind of the hinge between all of these elements. So we were proposing healthy interaction with nature, making new river walks, making a new looped walk around the old core of the town, planting new forests for creative play and meeting, and connecting new cycle and walking routes from the town through the countryside, because of course this is a gateway to the Slieve Blooms. You have to have a sense of what drives the town and what is its genius loci. And here, just taking the main square in a kind of an analytical drawing, we looked at what's the potential and what's wrong. Why does nobody want to live here? What's changed? Could we unlock our housing shortage by just reimagining these disused frameworks and tackling the challenges created by regulation and lack of vision? So what if we joined up thinking all the elements of life, locating housing or places for people to live within a great place, made of good materials, old and new, a proper public realm where people can meet, where people are favoured over traffic, a place where children can play, a usable, bookable community space, 1 or 2 good shops, and then you've all the ingredients for a great place to live. So the strategy for this, or for any town, might be, first of all, just removing the heavy traffic and creating a place where public space means just that. Diverting heavy goods vehicles by simply banning them from the public realm, and that's a big problem in Mount Rath at the moment, creating new routes, ensuring deliveries are done from smaller, appropriate-sized vehicles, reducing car usage, big challenge for Ireland and particularly for our towns. Car sharing, go-car type rental, car ownership is changing, and we know public transport beyond our cities isn't great, so there will be a transitional role, I think, for some time with cars playing a part, but it has to be thought about in an integrated way. Making healthy spaces with clean air and sustainable movement means taking the car parks out of our brilliant and unique town centres and putting small-scale parking with access via lanes and archways into the design of backland houses. Electric vehicles, as they evolve, will reduce pollution, and we also have to improve public transport with small local buses, and all of that can happen. We've also seen how one shop can change the landscape of a town. This is one down in Scull in West Cork. A brilliant bakery, a fantastic coffee shop, a new bicycle rental hub. And that begins to capture in our minds, I suppose, the community element of the town, which makes it a really bright prospect for young and old. Making that, gone the wrong way, making that quality environment, very important in this is materiality. So to conserve everything that's good, to take back the control of materiality, in works to existing buildings, to use timber traditional windows where they existed, to repair the plaster, to use natural slates, conserve the shop fronts, the metalwork. We don't really know this, but at our fingertips we understand when we come into a town where all these elements are present, what's there, and it's so easy to lose them, it's incredibly fragile. The new materials that need to be used also have to be appropriate. In a post-pandemic world of labour shortage and supply chain problems, CLT is a great use. Rock wool, stone, brick, timber, and appropriate energy refitting has to be a significant part of this. And there are grants for all of this. We want to use the grain of the town, using the landscape, using the laneways to understand the pattern and the heft of it. They're the places for potential that open up access to sites, to amenities like the river, to playgrounds, or hidden places for cars and bikes to park. And the energy crisis sharpens the need for renewables. And again, there's grant aid to support this. We're suggesting the back slope of roofs get used for PV panels. The PV panels can power the house, heating the water, charging up the car. Surplus energy can be sold back to the grid. And then that whole thing of changing the mode from cars to pedestrians and bike, existing new lanes, removing the traffic from all of that from our main spaces, and getting deep energy refits going in a major way as part of a general improvement in our housing stock and as a way of reducing our energy bills, and that's now starkly apparent. So for the pilot project, we're proposing 5 interventions: living over or in the shop, backlands development, infilling vacant sites, live-work units, converting industrial premises, and putting back a community building or one that supports community use, and generally strengthening the edges to reinforce the spatial quality of the town. And doing that, agency returns to people themselves. They take control of their own environment, choosing what new or existing housing model suits their lifestyle. And at the end of this, I'd like to share with you some research we did with our developer partner, Durkin Residential, on the potential costs of this approach. And we think every young person who sees these figures will get the importance of them immediately, because they are really starkly possible to do. So in a bit of detail, first in the living over the shop area, living over or in the shop, as well as the obvious fact that housing is the perfect use for vacant upper floors, and with the changing in retail over the past 20 years, often the ground floor as well, reusing what we already have makes a significant contribution to decarbonising our construction industry, together with the deep energy refits that go with it. Here we've looked at making extensions which take the burden of bathrooms, stairs, future-proofing, putting in soft spots for lifts, access via archways and lanes. And in plan, we're talking about good design opening up floor plates, creating a spacious and a bright way to live in an existing building with all the material characteristics of old fabric refurbished, providing simple pods on the upper floor. 2 or 3 pods could be combined to make larger places, 2 or 3 plots rather, combined to make larger spaces. So housing units could run horizontally across plots, 1 family per floor. By adding insulation to the roof, sometimes to the walls, by adding in inexpensive passive fire solutions, spaces can be opened up and really good-sized places made to give people generosity in their lives. So, for example, you could have a group of friends buy 3 plots side by side on a street, divide them horizontally, so each family gets a floor that's spread over the 3 plots. Each one could fit out the floor as it's needed. And because we do need more space than our grandparents who lived in these spaces did, because we do a lot more now in our houses. And this is just an example from one of something that we've done ourselves. People can have all the qualities of modern space within old and beautiful volumes that are really efficient in terms of heating and innovation in terms of how we live. And then just to look very quickly at backlands development, where we combine and build into the back of a long plot, and that has the potential to create large numbers of new homes. So here we're producing a mix of house types, single, 2 and 3 stories with spaces between. All these could be designed to passive house standard, availing of grant aid for that, and expanding into backlands, crossing plot boundaries or remaining within them, but generating interesting interlocking sites and atmospheric spaces. New models of habitation which suit an intergenerational living and working from home. So using lanes and archways for access, which keeps the street, you develop a series of small-scale houses behind the street frontage. So upper and lower floors, which are here on the slide, providing a range of accommodation. Single-storey houses for older people, say, have roof terraces for the family above. Each family has their private open space, but it's made like a jigsaw. Now, people in Europe, as Michaela has been saying, have been living this way for centuries. These houses could be designed really economically as prefabricated, passive, modular houses where parts can be put together in different ways to give variety and individuality. And typically, and the one on the left is one, it's not it's very close to a passive house, but it's one that we built a few years ago. What we're proposing is expandable, it's intergenerational. In this one, it's built in a courtyard form. Living is on the first floor with workspace and sleeping down below. And in a new backlands development situation, you could have shell and core housing. People choose the size and extent and how much they want to spend at any one time. So if I next move to things about infill sites, which are taking derelict sites and infilling them, and at the same time rebuilding the spatial containment, in this case on the square, by bringing back its edge. Now, because of the location on the square, we gave this particular project a more public and varied housing use. We suggested short-term accommodation over a ground floor cycle hub and a bike rental shop. And here we're saying the new building gets light from both sides because it opens onto an existing lane. That does with connecting the idea of connecting to nature, because we're seeing huge trends in everybody that we talked with for a much more active population, leisure time spent doing very active things as a family, like going out cycling for a day or going for a very long walk. And that celebrates nature in a very active way, takes advantage of the unique thing about this town. As I said, it's one of the gateways, but pretty unrecognised to the Slieve Blooms. So that could be a very useful aspect to exploit, where people come and stay for a night or a weekend to explore the natural landscape and become a part of a small town community like Mount Rath for a while. A small number of ensuite rooms and a communal dining room and a roof terrace support small-scale tourism in this particular project. And then we have a live-work unit, which is the reuse of a former garage. And the idea is, I suppose if you say, what would a developer do here? The first thought they might have is that the whole site should be demolished. But it's very significant that we're thinking, I think, more and more about not demolishing things. And it's also significant, we got, for the first time recently, in a further information request in a Dublin planning application, a requirement to calculate the amount of embodied carbon that would be released into the atmosphere by the demolition of a small building where a client wants to intensify the use of the footprint. Now, to me, that's very welcome because it's been the law in Holland since 2013, and I think it's mad it's taken so long to do that here. But what I think we want to do here is to reuse, to intensify, and to add on above, and that's what we're proposing in this particular project. So again, we developed the backyards to make a workshop. Could be a small artisan pottery, a craft business, a food business. Trainees come and stay in the accommodation over the workshops for a little while. The courtyards can be small but efficient. This is a courtyard in a small housing that we did. Workshops to the front and to the rear make attractive places to work. Deep energy refits to the old building and the extensions built to highly efficient thermal performance. And finally, just the last ingredient of the 5 interventions, to rebuild the market house on the footprint of the old one. And that could be done via community loans and via various finance models, a rentable, bookable space created with some public funding, some local sponsorship, which reactivates the entire public realm and makes it function differently. And this is just an example from Spain, where you have a market house in the middle of the square. It has the potential to be a retail space. We're proposing a retail space with a public hall over it, but a positive space that pays for itself over time. And just to give you a quick run through what our research has shown us in terms of the finance, you can see, I hope you can read these figures, and if you can't, I'll just say that a 50 square metre living over the shop, for example, could cost you, sorry, I'm trying to read that. I think it's 51,000, and this is obviously excluding the land acquisition cost. The 70 square metre one is less than 70,000, and these are prices that are done by a developer. So the Backlands development, again, we've got 1 bed, 2, 3 bed and 4 bed, and the cost for those, sorry, I have to read this out, just under 60,000, 115,000, and 172,000. So you can see that these are really significant figures when you start to really take out the cost of the land acquisition, which I accept is an important point. But I think for the sake of giving us a level playing pitch, this is where we need to start. And then looking at the infill cost, which is a little more, it's over 500 square metres, it's about 570,000 euros. And, sorry, the live work one, 400,000. And I suppose I just wanted to say that finally, what's missing in all of this? Because we've researched planning, conservation, finance, insurance. We've calculated that we could achieve approximately up to between 100 and 150 units in Mount Rath alone. And if you take it that we have at least 300 planned towns in Ireland, that as a kind of a grossing up could add about 45,000 units to our housing stock. So what needs to happen? I think heads needs to be knocked together. A scheme like this needs the vision to be adopted by the people of the town in question. And then I suspect it needs a town task force to implement it. It's a chicken and egg situation. Local authorities, I think, could set up a pilot project like this one in Mount Rath and start the ball rolling. Obviously, it needs people to want to do it. But until there's a successful demonstration somewhere, it's hard for people to actually grapple with all the agencies you have to engage with to make it happen. So a one-stop shop would be useful. And I'm wondering, what can you as the housing agency do to assist that? Perhaps you can push the idea of that pilot project and start to pull together at a high level everyone in the local authorities who are focused around maybe one project as a demonstration one. To me, the design ideas unlock these challenges and the historic log jams by proposing small, radical moves within the existing fabric. So I think we're suggesting catalysts for change and innovation. We're making spaces where people feel a sense of belonging. What I'm hoping that we could do on the public side is overcoming those fragmented policies that Brian Evans also mentioned. The idea of leadership is obviously really crucial, both in the local authority between planners, architects and conservation architects. They need to be acting together to make this happen, not to slow it down. Fire officers generally ask for beyond what's required. Nobody will stop them because they're talking about safety, which has to be achieved. But house fires are rare, and the technology exists to get around every problem that you can envisage. So at manager level, the local authority, I think, needs to corral that whole ability of the fire departments to slow things down. I could talk about banks and insurance companies, but I think I'm running out of time. But obviously they need to be more flexible. And also it's important to say local authorities can't do it on their own. It needs a total vision supported by a majority of people in the town. But I think it's the most sustainable way for our children to inhabit a world that's somewhere similar to the world we've grown up in. Our most successful historic towns, like Westport or Abbeyleix, for example, have had a mixture of local authority help and local involvement. But that's mainly improved the public realm. And now I think they need to move on to spearhead housing as a huge priority. So I encourage you to visit the Housing Unlocked exhibition, because I think it's full of innovation from 8 teams of architects. And thank you very much.
Thank you, Valerie, and I'll echo Valerie's assertions to visit the Housing Unlocked. If you have some time as you're heading out at lunchtime, and if you go out the main exit of this building, you'll actually walk past the Housing Unlocked, so it would be a well spent 10, 15, 20 minutes or even longer if you actually have it. We come to our final speaker in this session, so no pressure, Kieran. So Kieran is the Director of the National Retrofit and a member of the executive team in the SESI. Kieran is a degree and PhD in science from Trinity, so he's well at home here, and has authored several peer review scientific publications, and he's going to talk to us about the Retrofit programme and making homes sustainable. Thanks, Kieran.
Thank you very much. Thank you. Now, so first of all, I must say congratulations to the Housing Agency for 10 years. It's a great achievement, and hopefully many more to come. So I'm conscious I'm separating you from your lunch break, a small little panel discussion, and then your sandwich, so I'll try and make this as painless as possible. And Valerie teed it up really nicely. I'm going to talk about sustainable housing, sustainable communities, but from the housing side of it. So we started off this morning at the European, we went to Glasgow, we went to Vienna. I'm going to possibly try and take you to a degree inside the front door. While preparing for this, I was thinking to myself about sustainability, and I've worked previously in the environmental side. I'm now working on the housing side of things, and I just love this definition. Sustainability is meeting the needs of the present without compromising the ability of future generations to meet their own needs. And that's the UN Brundtland Commission definition of sustainability. Very broad, but captures everything and says what we're about. I work for the Sustainable Energy Authority of Ireland. So we're focusing on one element of sustainability, which is energy. And our game is to replacement of fossil fuel usage across all sectors of society. We've been around for 20 years, and we've been talking about it for 20 years. You could argue rightly that our time has now come, and we're front and centre in terms of climate change, cost of living crisis, energy crisis. So how does this then relate to houses? A couple of headline stats, you're probably all aware of this, but just in case you're not, a quarter of all energy used in Ireland is used in houses. So simple fact of the matter is we're not going to achieve our climate emission and climate change targets without tackling this part of it. That's what's the use. What comes out the other end, a quarter of all energy-related CO2 comes from home. If you just look at across all greenhouse gas emissions, we're about 12, housing is responsible for about 12% of all greenhouse gas emissions. So again, we're not going to get anywhere near our climate change targets without tackling this area, and Valerie teed it up nicely in terms of renovation and generation. And so did the other speakers. The residential sector is the largest consumer of heat energy, and most of that comes from oil and gas. So basically, where we are today is unsustainable. So we get from where we are today to the sustainable situation. The house, you're familiar with this, looking at it, most of the energy in the house, about 80% of the energy in the house is around heating, both space mostly and then water heating. And then you can see the fabric of the home itself where most of the heat loss occurs. So our homes pretty much aren't built in a sustainable way. In other words, if you start from here, we're not building them like that today, and you can see in the next slide. So we have a huge journey of work to do, and it has to be tied into with some of the points Valerie made in terms of re-energizing our towns and communities up and down the country, because there is very unbalanced growth in this country. So we really have an opportunity to do a number of things at the one time, which is achieve our climate change targets, improve the fabric and the areas in which people live for homeowners, and also regenerate communities. So they're actually all pointing in the same direction, so it's lining them up. Why are we doing it? In terms of the SAI and the Retrofit programme, we're doing it because it's in law, it's the Climate Action Plan. What we're going to do, the main target is to reduce 40% reduction, or 3 megatons of carbon dioxide equivalent between now and 2030. So a lot of people would have heard the numbers, very public at the moment, is the Retrofit programme and 500,000 B2 homes and all the rest of it. The actual target, what we're about, is actually CO2 emission reduction. How we're going to do it is retrofitting the homes and the various numbers of homes and what type of homes and to what level of retrofit, but we're about CO2 emission reductions. So you see with 500,000 homes, a slightly lesser known target, which is interesting, is 400,000 heat pumps, which is a renewable energy technology to put into homes. And to put a heat pump into a home, you got to have it up to a certain standard. There is a world of policy in place, both national and international European policy, but the one I've highlighted in red is it's actually the law of the land. So irrespective of what government's in place and who says what about it, we've baked all these targets into the law of the land. We've got to do them. Just in terms of where we are at the moment, the current housing stock, the building energy rating distribution, that's where we are on the left panel here. Basically, half our homes are a D1, a B or D1 rating or worse, and we need to improve that considerably. So that's a little colour graphic of it there, and you can see obviously the red is bad, the A1, A2, and 3 is good. About half our homes, from about between C3 and D1, half of our homes are worse and the other half are better. And even with the ones that are the C3, C2, C1, we need to be improving those as well. Unsurprisingly, when you break out the bird distribution by decades, and you can see here clearly from 2012, 2016, the building regulations have improved and improved and improved, and we're right up at the top of the scale there now, so they're all green. As you go further back, you can see that the standard and the BR ratings of the home decreases. So what Valerie was talking about in terms of Mount Ratton, having to see details, you're probably talking about the latter part of this diagram here, the 40s, the 50s, the 60s, and probably in before that. And she did reference the level of retrofitting is going to happen. So the ideal is we get those red bars and move them green. So what we have then is a plan. It's always good, I think it's kind of a truism, it's always good to start with a plan. And if you don't have a plan, you're really not at anything. So we have the National Residential Retrofit Plan, which is a subset of the Climate Action Plan. And that plan sets out in quite a degree of detail what we're going to do to decarbonise the residential sector. I'm not going to go into huge detail, but just touch on some of it's a 4-pillar plan, which is kind of structured quite nicely. We're going to talk about driving demand activity, finance, structure and governance, and supply chain skills and standards. So the broad thrust of this is we've been retrofitting home to a greater or lesser degree for about 20 years in the SEAI, but really you could argue it's this year where we've turbocharged it and we're really taking off. And what we're trying to do is build the foundations of a plan that will allow retrofitting to happen at scale. So we need to commoditize and scale it. So we've commoditized our grant processes. They're like menus. You just pick them off a menu, you can scale them. We're looking at sustainability. So we're trying to increase the energy performance of the buildings and ultimately decarbonize them by putting in renewable technologies. Agility. So we're talking about 500,000 homes. We haven't said which type of homes where, and we know we're going to have to change the nature of grant packages and focus and target along the way, because when we talk about homeowners and homes, they're not one homogenous blob. They're all sorts of different homes, and we've heard from different speakers, different locations, different local authorities, different histories. So when we talk about a home, they are not homogenous. So we're going to have to customize our packages and our delivery to match that. And the important thing then is affordability. And I touch on a low-cost loan, because retrofitting is expensive, or relatively expensive, but we're going to have to support everybody, because having a small quarter of the population able to achieve it or to undertake it doesn't really work for us. We have to hit all of the homes across the board. So demand and activity, to be honest with you, I don't know we do need to do much in this at the moment because it's going through the roof. We've launched the programs pretty much at the same time as we have an cost of energy crisis, a cost of living crisis, which has morphed into a cost of living and an energy crisis. So demand at this present point in time for retrofitting is going through the roof. There's no shortage of demand. So when we're starting off the building blocks, we were talking about how do we convince homeowners, how do we get people involved and sell it. We did an awful lot of behavioural work at the back of this, and the big ones were complexity and hassle. So we developed these one-stop shops. It takes some of the complexity out of it because people really don't know what they're about, where they start, what they do. We are simplifying the customer journey. So this idea of the one-stop shop, bringing all of the strands together to make it as simple as possible for people to do their journey. So they're the two big parts about demand activity. Financing and funding models, there's two parts to that. One part is financing the homeowners, the other part is financing and funding the businesses. On the homeowner side of things, we have very significantly enhanced the grant levels. But in reality, when you look across the housing stock and people's incomes and things like that, we're going to have to do more than that. So not only do you give them tasty grants, or very significant grants, and you can see down at the bottom line here, the NDP money allocated to the retrofit program between now and 2030 is €8 billion. But we have to give people kind of low-cost, government-backed sustainable loans to be able to access the grants in the first place, because one of the complaints and one of the criticisms is, yes, you have to pay the money up front and then get a grant back, but in many cases people don't even have the money up front to do that, so that's going to lock them out of it. So early next year we expect to see a very significantly discounted government-backed low-cost loan scheme. We're also working very closely with our contractor base. to help them supply and scale up and develop their businesses, because there's a whole industry sector. There's 8 billion of government funding in the next 7 years going to go into this sector to retrofit. And it doesn't stop there. When we get to 2030 and do what we need to do, we've the other 2/3 of the home to do as well. So this is a 2023 to 2050 project at least, but the first step of the plan is to 2030. So we're working with contractors and businesses, and we're looking at solutions for those as well. Supply chain skills and standards. The thing we're talking about supply chain at the moment, and Valerie would have referenced it in her presentation, and others would have referenced it as well, is that one of the biggest shortfalls at the moment is people across all sectors. Last year we were talking about people shortages. You know, even for example in the teaching sector, it was always physics and maths teachers. Now it's teachers generally. It's hospital consultants. It's people in home care. It's people in hospitality. I don't know where all the people have gone, but the building sector, the general building sector, is no different. And unsurprisingly, the retrofit sector is no different again. Right now, the biggest limiting factor today to delivering more retrofits in homes in Ireland is not money. It's not grants. It is people. It's not even materials. And materials took a serious wobble at the start of the year, but that's come back online. And people are starting to adapt to different supply chains post-Brexit and whatnot. It's actually people to do the job. And I think our earlier presenter mentioned about the people from Poland coming on, and they would have all gone back home. We're now going further afield in the construction industry. We're going out to Middle Asia and places like that, looking at South America and places like that, to get the people to do the jobs. But from a contractor's point of view, we've got this government, this opportunity, if you want to call it. It's backed by policy, not just Irish domestic policy, but EU policy. So even if we didn't decide not to do it here, EU is going to make us do it anyway. We have long-term financial certainty. So in any business, no matter what business you're running, right? If you have a market and you know the market is stable and it's growing, people will invest in that market. That's critical. So we've got the policy, which is developing the market. We've got the funding going into it, and we've got the NDP funding in the form of grants. On top of that will be the low-cost loans, which will be the private sector coming into it as well. Retrofitting as well, and we talked in the last presentation, really referenced it quite strongly. It'll impact in every community in the country, so it can have a transformative effect on smaller towns if done right. It allows people to live over the shop. It'll allow people to live in rural areas and things like that they may not have done. And we're saying as well, in the face of a slowing construction sector, a traditional construction sector, we're saying to people, actually retrofitting provides you with a kind of to use the pun, insulation from maybe the more cyclical nature of the new home building sector. But the constraints are on the workforce and the labour side of it, and we're doing a lot of work with contractors and the ETBs in terms of training people and putting people on courses and things like that. It would be fair to say we're at the very front edge of this journey. There's a huge amount of politics and publicity around the programme at the moment, and I've recently saw it being branded as a failure, which was very interesting given it's only about 6 months into it and we have a 10-year programme. So that was early to call the game, but that's what we're doing. We're working in that space. Where we're at the moment, we're in the VUCA environment, and that's one of these business terms that came out of the military. Volatile, uncertain, complex, and ambiguous. The old Chinese proverb says, may you live in interesting times, and it'd be fair to say we are currently living in interesting times. Who would have predicted in 2019, when you were last here for your conference, that we would have had a worldwide pandemic for the guts of 2 years? And we got out of that and shook ourselves down, and we're into a European war, the first one in 50-odd years. We were already starting to have an inflation crisis to the back end of last year before the war. That's been turbocharged by the war. We have an energy crisis at the moment. We have inflation high at the highest level since about the early 1980s. We have interest rates in the ECB, which we all thought were stuck to the floor for the last decade, are now creeping up, and there'll be a couple of more levels. And that's what we know about, right? So we get all that and figure out what's going to happen next year, the year after again. What happens if we get COVID, the revival or something like that? So we're in this VUCA environment, but actually at this present point in time, I suppose that the hidden silver lining in the cloud is it's driving significant demand for retrofit. When you look at energy prices at the moment, they're sky high. They may well abate a small bit, but they're not going to go back to where they were. We're on this new trajectory that it's going to stay dear and get dear. So more and more people are looking at this. We can slow down in the sector. It benefits, in the wider construction sector, it benefits retrofit. The climate change targets are there, and there's any amount of scholarly debate out there at the moment of what we do and who does it and how we do it and all the rest. But at the end of the day, we have to do things differently. We cannot keep doing things the same in terms of how we live, where we live, how we transport, how we drive, our homes. So the climate change is a big plus. The negatives are supply chain, labour, and materials. So supply chain is a significant negative. In terms of labour, it's a real drag at the moment, but may well be counterbalanced by a slowdown in other parts of the economy. We are worried now at a European level, and start looking of things, an awful lot of what we do comes from the Far East and China and places like that. So even the constant lockdowns in China and places like Shanghai have had impacts in supply chain getting to Europe. So we have another opportunity in the Climate Action Plan, and that's all about developing a domestic economy. So for example, heat pumps. There's a huge opportunity. If we're going to put in 400,000 heat pumps into homes, there's a huge opportunity for domestic engineering companies to start developing heat pumps to put into that market. And similarly, we're talking to those companies to make sure that what we do, we can actually generate some more revenue and jobs in Ireland. The cost of living is undoubtedly driving demand at the moment. But that's a very interesting one. It's like a dial. If it goes up too far, what we have is the economy, goes into recession and things are too dear, people tend to lock down. So it's all about sentiment. So people are who have the funding say, you know what, I need to do something now, and are trying to do it. Hence, there's some delays in retrofitting because it's like the last bus home from the pub on a Friday night. Everybody wants to get on the 12 o'clock bus, and nobody wants to get at the 9 o'clock, 10 o'clock, or 11 o'clock bus. We're at that point now. In the last 6 months, when I'm talking to the contractors, the amount of leads that have turned into action and work is through the roof. So everybody wants to retrofit their home this winter. But if it goes too far, people tend to lock down, and that's a real worry for us as well. And then, of course, interest rates and inflation. So then the question, just to finish off, is what is a sustainable home? So you're thinking about all the stuff in the retrofit plan and all the rest of it, but it all boils down to a home, and a person lives in a home. Actually, Professor Evans said it nicely. He said, people make places. Well, I would argue that homes make people, right? So part of the fabric of a community is the home they live in, and having a suitable, warm, well-insulated home that's energy efficient, it's cheap to run, it's decarbonised. That's what we're about. The interesting thing is, I just mentioned this point here, the warmth and well-being study. This is a study we did in the SEAI with the Department of Health and some local authorities, and also the London School of Tropical Medicine and Hygiene. And what we did is we tested in the Irish scenario the medical benefits of retrofitting a home. So they looked at people with specific respiratory diseases. And we did a very well-controlled medical social study on the benefits of retrofit. So again, in retrofitting, and any technical people in the room will know that you can read about stuff in Holland or Germany or Sweden or whatever it is. You have to test things for the Irish situation because we are stuck in the northwest shoulder of Europe. We're a bit damper, a bit wetter, slightly different temperature regimes. So we tested the benefits of retrofit on homeowners in the Irish context. And you can read those two boxes quicker than I can read them. But the key point was that the retrofitting, so we got homes and we got people who had COPD as a target group, which is respiratory illness. And the result of it is that energy efficiency interventions, they reported themselves through these various surveys. They're these perception surveys, standardized perception surveys. Prior to the study, homes are much too cool, much too cold. After the study, 80% reported their homes are comfortably warm afterwards. So you do the retrofit, they're feeling much better in their homes. It becomes a place to live. What's really interesting is here is this SGRQ is, I thought it was kind of funny, but maybe not if you're a medical person, the St. George's Respiratory Questionnaire. I didn't think just St. George was doing respiratory questionnaires, but apparently he is, or was. So what that actually is a standardized form of questionnaires. So when you're doing this kind of social studies, you have standardized forms of questionnaires. And this SF36 is also a standardized form. They have standardized questions, standardized way. And what that showed was, when they did respiratory questionnaire, is that the retrofitting in the homes resulted in improvement of self-reported respiratory health across all of the scores, the 4 metrics within that questionnaire. And there would be a consistent benefits across all dimensions of the SF36, representing physical and mental functioning. And some of the anecdotal evidence when they spoke to participants was they could now invite people into their home. They now sat in their home, they use their home in a different way. The home really became the center of their lives again, rather than this cold place that was constantly cold and dragging them down. So that's what a sustainable home is. It has tangible benefits. And the important point, and what we're really all about, is that's not for one cohort of society or another, or the rich people or whatever. That has to be attainable for everybody. And at a government level, we have to design our packages and programs so that everybody can aspire to having that. Thank you.
Thank you, Kieran. And while the panel is getting in place, I just thank the audience, I suppose, for their participation, but also for the kind remarks on Slido about the absolutely excellent panel that this has been. And that's before you even answer a question, so that's can only go up. And the diversity of input is of benefit to us all, and more of this should be done. So no pressure, Sarah, to go again. The really enjoyable discussion of concept of place. So we are, I hope, joined by Brian and co, are we? Well, I'll actually go and ask I'll direct the first question to you. Oh, welcome, Brian. Welcome, Ganola. I suppose one of the questions, first questions, was about, there's a very enjoyable discussion on the concept of place, and how can we ensure communities own the understanding of place, and the meaningful reflect in national, and this can be meaningfully reflected in national policy. Brian, seeing as you started the discussion, I might go to you first and then open it to the rest of the panel.
Thank you very much. And let me add my voice to the congratulations for the 10th anniversary of the Housing Agency. Well done. Yeah, I think it's all about understanding the difference between consultation, engagement, empowerment, and ownership. So when Valerie poses a question like, her cascade of three things need to knock people's heads together, I would argue that's what the Scottish Government's trying to do with the place principle. The thing I didn't mention earlier is that there's a veiled threat in that, that the Scottish Government might take a view as to whether or not people are following the place principle when they consider the allocation of budgets. So I think that maybe constitutes knocking heads together. In places like Mount Rath, people just need to want to do it. That's the €64,000 question, isn't it? And I suppose in all my years in practice, before I do what I do now, the trick in a lot of engagement seems to me to lead people through processes and to have them rationalize and decide for themselves that some of the things that you already know is a good idea, and it's a good idea for them. They need to make that decision, come to that realization themselves. So it's a bit like the old legal proposition in the days when I was a practitioner, and I used to appear at public inquiries as an expert witness. I was used to our brief saying, I'm going to ask you and I'm going to ask the other people a whole lot of questions I already know the answer to. But the point is that we need to get the inspector to the same position. And I think that is the issue with the small towns in Ireland and the small towns in Scotland, that we have to engage with people in such a way that they feel empowered and they feel that what we are talking about and what we're doing is being done with them rather than to them. And that, in my view, has always been the key criterion for engagement, empowerment, and subsequently ownership. I don't necessarily mean land ownership, but it can move into that as well, because one of the things we're looking at in Glasgow at the moment is whether or not we could have a place stock transfer, like we had a housing stock transfer, to take underused assets and other assets and move them into the control of community-based housing associations. So it's that cascade, the Maslow ladder, whatever, that people need to feel engaged and empowered in the process, and be assured and convinced that they are doing it because they want to do it and that it's not being done to them in order to achieve policy outcomes, which is the biggest challenge that we all face, particularly in the perma-crisis, or as I like to call it, the paradigm shift that we're living through. And unless I'll stop there, but if I could just say, Michaela said something about we need models that are crisis-proof. I don't think that's possible. I think we need flexible, agile models with scenarios that are capable of dealing with this cocktail of change that we're going through, that's all come together at the one time, at a particular time in this century. And for most of us here, for most of our lives, it's been a very optimistic and balanced time, and bad things happened over there or in another continent or something. And now it's all happening around us. So it's not a question of going back to normal. It's not a question of a new normal, which is a bit utopian. It's about understanding what the next normal will be, and how we devise place-based mechanisms to engage and empower people to work with their places, and bring about a lot of the changes that we all know are necessary. But if you're struggling with cost of living, meeting your energy bills, putting food on the table, then it's a more abstract proposition. So we need to make it real for people in that way. Thank you.
Thanks, Brian. I might actually come to you, Gulnara, next, and just maybe add a little bit extra to that question, because it's still, I suppose, relating to place. But how do we take into account when consulting people maybe that aren't in that place at that time and are in need of housing going forward?
Thank you so much for the question, Tara. I think that, well, first of all, I would like to maybe come back to this regional action plan that UNEC endorsed last year. As actually Brian Evans was the main author of this regional action plan, which was prepared. And in fact, this placemaking was introduced into it. And I think it's a fundamental change in terms of how the United Nations are looking actually at the housing topic. So I think this is really very important. So, to come to a question, how to do it when, if I understand, Tara, your question is that how to, promote the placemaking when people are not engaged yet, right? This is what I understood?
Yes. Yeah, so we'll say where you're hoping to attract more people into the area, but you haven't, obviously you can't consult with them because you don't know who they are.
Well, this is well, let me first of all maybe to go back to what Brian was saying about the placemaking. I think in general it's a very powerful instrument, and really just to say that in many countries, in many cities, we're really trying to implement. I just came back from Central Asia, where I work actually in informal settlements. And this is where people are not always able to contribute to participatory process because they're not legally registered. They don't necessarily all the communications. There are no actually roads. There are dirt roads. I was there Friday. So it's not easy sometimes engage, but when there is a eventually established community, they find way to communicate and engage. So I think, building the community in different ways is very, very important. How to engage in people, inhabitants, when they are not yet there. In fact, I have a very interesting example. I'm working right now with Ukrainian cities. We're doing the master plans for Ukrainian cities for their reconstruction. And this is where exactly the situation where we would like people to actually return to the cities when they will be rebuilt. And this is a concern of the mayors and the local government offices, how to bring people back after the cities will be reconstructed, because so many people, inhabitants of those cities, we're working in the cities of Mykolaiv and Kharkiv, left not only the cities, but left the countries. And you know that especially today with no electricity, no water in those cities, it's really difficult. So more people are leaving. So what we have done is we established online surveys for inhabitants, which is communicated through the social media channels, so through the usual social media channels, but in Ukraine, for instance, they're using Telegram. So this is, I think, and social media these days is a very important way of collecting inputs of people, and we developed, I mean, our colleagues, and this is colleagues from the architectural companies, it's Norman Foster Foundation, One Works. So there is a number of international organizations with whom we work on development of this survey. And these surveys, they're rather long, but they really allow us to understand where people would like to live, you know, what they value most, what they see as the kind of the main challenges. And this is a result of these surveys. They are processed using actual digital tools, the artificial intelligence. And so from this point of view, Tara, I would like maybe emphasize the importance of the digitalization. I think this is probably not yet, we did not look so much today, but in processing opinions of people, you know, the use of artificial intelligence, especially like open questions, I think very important. This is what was our experience, for instance, in cities like Mykolaiv. And of course, the willingness of those who plan the cities and to use this kind of participatory approaches in planning the cities. But in general, I think the placemaking approach is definitely something which really allows to engage inhabitants and people who potentially may come to those cities. And we need definitely to use us more widely. And we at UNEC, for instance, also developing more innovative ways for stakeholder involvement, because of course we're all speaking about engagement of communities, but we know that sometimes it's expensive, sometimes it's not attainable by usual ways. So in addition to digitalization, I think we should think about other innovative approaches for engagement of the community, which is critically important today. Thank you.
Thanks very much. Just this is kind of going to be a little bit of a selfish question now, because I'm the Director of Services and Inclusion in the agency. So I'm going to direct this to Michaela. A number of people would be interested in how you deal with housing for older people, disabled people, young people, etc. In both Glasgow and Vienna, but we'll maybe concentrate on Vienna. Are there specific providers, or what way do you do it?
This is a good one, because I think that one thing that we've seen is that we needed to adapt a lot of times our system and our quality criteria, and we have seen that we face the phenomena that everybody faces demographic change. We've talked about small units. There is a need for smaller units because we have a society where people tend to live on one person. So we started to adapt also our housing scheme to that. And of course, we need to have these provisions for barrier-free buildings, which everybody knows not easy. It's easier in a multi-apartment store again, but it's also clear that you need to adapt existing buildings often. So you need to react to that. In fact, we are also talking about groups like single mothers. We have one new municipal housing not unit, a whole building under construction, which is now addressing the needs of single mothers, because we found that also the community building there is very important for them to help each other. And even if it's not in your life plan to stay a single mother, it's a reality. So it's better to care for these kind of needs as well.
Valerie, I'm going to put one to you. How do we get architects capable of quality of design shown in your presentation and indeed all of the presentations involved in rural Irish towns and deliver at scale? Not sure that the two go together fully, but...
Well, yeah, I don't think you have any difficulty with that, actually. I suppose procurement is probably one of the biggest barriers to any of us doing anything. Because it takes so long. I mean, if I was to say to you that every time we put in a bid for a job, it takes, I would say on average, 3 people in the office 3 weeks of their time to put in a bid, and many of those just go up, and sometimes the bids just disappear. Nobody knows, you ring up months afterwards and they say, yeah, I haven't made a decision about that. So I think procurement is a major barrier. I think that's something that all my colleagues have spoken about a lot. But I think there's a huge enthusiasm among architects to get involved in this. I mean, this is what we do. We are doers, not policymakers. We're actually doers. And getting out on the ground and seeing something change and happen is what really excites us. I think the whole thing about how do you actually get people involved, the whole thing of bottom up is terribly important. So I think if you have a town like Mount Rath, I'm sure there are architects in the vicinity, there's architects outside of the vicinity, but there's people generally who would be interested in that as a scheme. But I do think the whole thing of getting somebody in terms of both exciting both the population who want to be housed and who are looking for a place to live, and to put together the architects who might be able to give that service. A really good way of doing that is to have a demonstration that says, well, here's one we made, and let's see how it works. And when I originally started talking about the book that I wrote, which was all about identifying the kind of the really strong patterns of Irish towns that we have and what a fantastic resource they are, and as Kieran says, the whole thing of the unbalance of our economy and the fact that we've too many people trying to want to live in Dublin, but actually the pandemic did a lot to change that. So I think that's a place where local architects will be terribly interested in getting involved. And really the important thing is to make the barriers which are too easily there because of procurement, which are to do with turnover levels and whether you've done exactly this kind of development before, etc., make it simpler. That's all that we have to do, is make it simpler. And just, I mean, there's so many things that can happen. Let's not worry about whether somebody says, oh, well, she knew him and he knew her and that's why that got done. Doesn't matter. Just let's get it done. And the more people are out there trying to do these things, the more it'll happen. So I think if you're able to relax things a little more, you'll do better on that whole front of getting architects involved, because we really want to. Everybody really wants to be involved in housing.
Great, and I think Housing Unlocked is a very good example of that, with the amount of input that there was, or submissions that there was to that. This is a general one, but I'll maybe, well, I suppose, seeing as it mentions Glasgow and Vienna, I'll direct it towards the two, Brian and Michaela. Does Ireland need to give more power to local authorities in large cities to allow for the city's specific place and housing policies similar to what you did? Michaela,
Yeah, I think that what I see is that it helps to have a lot of powers. Yeah. You need to have control of a lot of things. You need to control land and land prices. If you don't, you're ending up in misery in housing sector. You need to have control of, if you're, for instance, national law is regulating rents in Austria. But what we do in Vienna is, of course, setting some principles whereby the private rental market is defined also in a way. So we say, okay, I mean, if you need money from the city, if you need a loan from the city, you use the infrastructure from the city, we want to have something back. So giving you these kind of powers is really important, and doing a zoning law, taking even the possibility to create a municipal housing company, a cooperative housing association as a city or with a partner, getting those legal possibilities, I think that's so important in order to get more room to maneuver, more ways to organize your housing system, and I think that's really vital. Yeah? And also talking about public transport is important, because it's so linked. The mobility is so much linked to housing and options for work. And if you're in a remote area, and we found it out when we have a lot of metro lines and tram lines in Vienna, but we saw immediately when we prolonged one of our metro lines to the north part of the city, and it had an immediate effect, for instance, on the possibilities of women to get better jobs. Immediate, yeah? And that meant because they were commuting faster and easier, and that was so important. And we saw that the investment in this public infrastructure and doing good investment as a public entity, it really is also good for gender equality. I mean, in so many aspects, caring for kindergartens, caring for public transport, caring for good and affordable housing is good for the empowerment of women.
Brian, I see you nodding away there, so do you want to add anything quickly to that?
Very quickly, generally speaking, the closer to the people, control takes place, the more effective it can be and the more agile it can be, provided there are overarching principles and a general consensus around about the direction of travel. Otherwise, the further up the decision-making tree it gets, the more people tend to regulate, or officials tend to regulate and develop one-size-fits-all regulations. And if you're working with communities like Mount Rath, you've done awful well, Valerie, because everybody's now sensitized to Mount Rath in Ireland. But you don't need a one-size-fits-all policy in order to be able to work with that. On the last point, if I could just make a plea for universal design as opposed to siloed or specific design. If you indulge in universal design, then you're designing for all demographics, all genders. You're trying to make places work for people, irrespective of age, gender, race, culture, so on. And that is a fundamental principle, it seems to me, which is helpful. On the point of planning for people who are not there yet, I would commend the work of the Welsh Government, if you don't know it, about their Future Generations Act and the raft of policy that goes with that. And finally, and I'm sorry, I'm putting all of this in because I'm afraid I have to go in a couple of minutes as I have a meeting with the political leadership of Glasgow to try and convince them more about this last point. One of the recommendations from the Place report, the People Make Places, is the establishment of place panels, a place activation panel and a place enabling panel. And the place enabling panel goes right to the heart of the issue that Valerie's raised about procurement. So rather than every single exercise having to go through a procurement exercise, you go out to people not only from the local area, but further afield as well, and ask them if they're interested, validate them through CV and professional indemnity insurance and nothing else. They're paid a standard day rate, and you call off from that panel people for 10 days here, 10 days there, to work with communities, work with principles of universal design, and seek to develop ideas around about engagement, empowerment, and subsequently ownership of the ideas. And that's one way that we are trying to address this issue, because we all have this issue of cumbersome procurement that really does get in the way. So I very much support what Valerie's saying there. Thank you very much.
Thanks, Brian. And I know we've run over, but I'm just going to ask, and I'm going to ask you one final question, and we leave it at this. Does the EU have a role in delivering sustainable housing? Brian is in agreement anyway.
Yes, of course. For instance, we are at UNEC observer to the EU presidencies, and there is the meetings of the focal points for housing, as well as the meeting for urban development, and in both topics, this is discussed. So I think there's very good cooperation on this.
Thanks very much. I'm actually, and again, apologies for running a little bit over, but I think there were questions that needed to be asked. Thanks to the panel, and as the people on the Slido said, it was very diverse. Valerie, you can invite us all when you're getting the freedom of not Mount Rath to your celebrations. And Michaela, welcome as always to Ireland. I'm going to hand over now to the Chief Executive of the Housing Agency, Bob Jordan, who's going to close the conference.
Hello, everybody. I think you'll agree it's a very enjoyable conference. I have 4 jobs to do in the remaining 0 minutes available to me, okay, which is to I suppose do some thank yous, do a recap and a reaction maybe to the two sessions we've just had, talk a little bit about the housing agency, and present a prize. I suppose the first thing to say is just to thank everybody for their birthday wishes for the housing agency. We really appreciate that. Just to thank Minister Darragh O'Brien for being here this morning and showing such strong support for our work. Thank Michael Carey, the chair of the Housing Agency Board, and indeed the other board members that are here, Anya Stapleton from the Department of Housing, David Duffy from Property Industry Ireland, and Donald McManus, who has been our longest serving board member and had his final board meeting this week on Tuesday. So thank you, Donald, for all your service to the Housing Agency. I want to thank the speakers and chairs. I'll mention the speakers individually as I go along, but just the chairs of the sessions, David Silk from the Housing Agency and Claire Feeney from the Housing Agency. I'd like to thank the staff that have organised the event, Sarah Kennedy, David Silk, and a special mention to Alex Dowdall, who is leaving the Housing Agency on Monday for the Department of Higher Education. Just to say that Alex has been an incredible staff member of the Housing Agency, organising our land series, helping with today's conference, and in fact putting in place a proposal for a housing apprenticeship in the future. So thank you, Alex. And also the most important people to thank are you, the audience, in the room here today and online, for your questions to all our speakers and for making it such a lively event. In terms of the recap, I think you will agree the first session with Josh, Michelle and Dermot was a bit a tour de force, really. I can only try to summarise, but I suppose, you know, Josh talked about housing as a consumption good and a financial asset, land as a driver of house prices, which Dermot didn't fully agree with, that wall of money that piles into a finite resource and what it does in terms of driving up house prices, obviously credit accelerated by deregulation of the financial sector, leading to a decline of home ownership, the rise of the private rented sector as a core asset, although some brakes are being put on that with rising interest rates, the fact that the cost of money to investors is cheaper than to individuals and social housing providers. And then Michelle went on to talk about how we tame that. And I suppose what she was saying is macroprudential rules and central bank reserves are not going to do it. However, sustainable finance for social housing and tax policies can help. And I just want to thank all the speakers there. It was an excellent session. The next session had 5 speakers, Gulnara, Brian, Michaela, Valerie and Kieran. This is a harder one to summarise, but I think what I took from it was really the importance of Housing 2030 as a tool for policy development, the importance of shaping our housing systems rather than just reacting, housing as a basic right, the need for long-term view, the role of cities and evidence-based policies. And I suppose what Gulnara did said is that we need to learn from Housing for All in relation to all those areas. Brian very much focused on placemaking, which I think is such an important issue, and that people make places, but we need overarching principles around place quality, value and attachments to place. Obviously, we should congratulate Glasgow on its achievements in terms of cultural regeneration, area regeneration, and using social and affordable housing. And in fact, the fact that, you know, that disadvantage that exists there in terms of retrofitting can be corrected through social and affordable housing. Vienna, Michaela has already contributed a brand new tenure to housing in Ireland. So God knows what's going to happen next, Michaela, in terms of the cost rental and your contribution in 2019 to the Vienna exhibition. I took a lot of things from what you said, but I can only talk about 1 or 2 of them. I suppose one is your pride in being in municipal housing and how social housing can be stigmatised, and indeed that's true in Ireland in many situations. And the fact that we do need a variety of housing types and tenures to crisis-proof our housing system and need mobility between tenures, and that we all need to work together for a vision, that particular vision. Valerie just fizzes with ideas, and I stopped sort of writing them down halfway through, Valerie, but it just proves, I suppose, the benefit of our Housing Unlocked exhibition, to just unlock all those ideas that you have, to join the dots, and to really facilitate that bottom-up approach. And I think one of the things that you said yesterday, but not today, was, you know, that these places were at their peak back in the 1850s, and we actually need to get back. We have the places in Ireland, we just need to give them some tender, loving care So thank you for your participation and in Housing Unlocked. And Kieran finally talking about just the importance of retrofitting, and it couldn't be more important right now, the huge demand for that and the huge sentiment that's towards it and how we need to facilitate that. I just want to talk briefly about the work of the Housing Agency in terms, like we are called the Housing and Sustainable Communities Agency, and I'll be very brief, but we do work very closely with local authorities and approved housing bodies on delivery, viability and affordability. We're, I suppose, involved in a large number of actions in Housing for All. One of them is around bridging the viability gap in terms of delivering apartments. So that gap between high delivery costs and what people can pay under the Crecona City Scheme, which will deliver thousands of apartments in our urban centres for home purchasers who want to live close to public transport, closest to places of work, closest to places of education. Affordability and the embedding of an affordable segment within the overall housing system is a huge part of the Housing for All plan, and essentially the Housing Agency has been involved in virtually all of the mechanisms and schemes there. We've been involved in the design of the First Home Shared Equity Scheme. We're not involved in its implementation, but certainly involved in helping to set it up. Very involved in cost rental as a new housing tenure. And in fact, the Housing Agency has become a lender over the last 2 years of cost rental equity loans to make cost rental a reality. And what cost rental means is really delivering rents that are based on the cost of construction, managing and maintaining properties at least 25% below market. And although we're 100 years behind Vienna on this, over time, the growth of that cost rental segment will ultimately have a dampening effect on our overall private rented market, which is something that we really want to do. We're also involved in assessing affordable housing fund applications from local authorities to enable them to also deliver affordable purchase homes. In terms of social and delivery, we're involved in the assessment of the main funding mechanism for social housing by AHBs, the payment and availability and CAF agreements. And we provide hands-on, it's important to say that the Housing Agency also has a technical section that provides hands-on technical support for the delivery of social housing projects with project managers, QSs, architects and so on, and helping with procurement. And that can be very valuable to AHBs who may not have a full-blown technical section, and indeed for some smaller local authorities. The Minister mentioned land today. We already have land, 30 sites under the land, or 30 sites currently available under the land aggregation scheme, which we're going to offer to approved housing bodies to make proposals on. We're obviously going to be going forward, spending 125 million on land for local authorities. Just to say that there is a land gap in Housing for All up to 2030. Beyond 2026, there is a gap in terms of local authorities having sufficient land for housing. And obviously, if Housing for All is asking approved housing bodies to move to direct construction, they need land to do that as well. We're involved in the issue of vacancy has come up quite a bit today. We have a property optimisation unit that advises local authorities on compulsory purchase orders. We provide technical support around bringing vacant residential and non-residential buildings back into use. And we're very involved in the Town Centre First project, which is really around not only bringing vacant buildings and properties back into use for social housing, but reanimating and revitalising our towns and villages. And finally, I suppose the whole area of social inclusion has been mentioned quite a few times today, and the typologies that are required. It's really important in increasing housing supply that we also get the right kind of supply. So the Minister mentioned the rising homeless figures. The solution to that has to be to deliver permanent homes, but we need one-bed homes. The Housing First National Office is based within the Housing Agency, so we're very focused on increasing the supply of one-bed homes to move people permanently out of homelessness. And finally, I'm down to the prize. It's not a raffle prize, so don't get too excited, okay? But it is an important prize. So the Housing Agency, we're very committed to the professionalisation of the housing sector. Each year we support students enrolling on the Institute of Public Administration and Irish Council for Social Housing courses in housing studies through a bursary award, and we've awarded 150 bursaries to students since 2018. And each year we also award an essay prize for the most original student major essay submitted for the assessment as part of the IPA's Professional Diploma in Housing Studies. And Cian Rowan, I'm going to invite Cian Rowan from the IPA to come up and join me in terms of the presentation of the prize. Thanks, Cian. We work hand in glove with the IPA in terms of providing training and education to people in the housing sector. So the winner is, without further ado, is Holly Moran. And Holly's essay is an exploration of the practicalities in defining potential sub-county housing need and demand assessment geographies for Ireland. Holly's looking for a longer title, so if you have any ideas. But essentially, it's a very important essay around looking at how we assess demand for social housing. And well done, Holly. Okay. So. Thanks a lot, everybody. Thank you.